Because I've started to say that like in articles and stuff, whereas people will say, well, according to Austrian economic theory, blah, blah, blah. And I'll make it clear that this comes out of the Austrians, but I'll say things like, well, the best economics tells us X, Y, Z, and then, of course, refer people back.
And that's why I coined that term causal realist economics.
Yeah.
It's a more descriptive term, and they're not doing that. We are. We're explaining the real causes of economic phenomena.
Yeah, and we'll touch on that a little bit when we get to business cycle theory.
That's fine.
Yeah. Okay, we'll start in about 1 minute. We'll just let a couple more people come in if they want. There's more people here than I thought would be, so good job eating breakfast fast.
It's great.
All right. Okay, I guess. All right, I'll introduce you. We'll get to the questions. It'll be great. Yeah, and I'm trying to keep these to about 30 minutes.
Okay, yeah.
All right.
I have to run upstairs.
Yeah, you've got somewhere to be. Okay. All right. All right. Welcome back to Radio Rothbard. We have a live audience here this week, as you can hear or see, depending on how you are listening to this episode. And so thank you for joining us. And this week we have Joseph Salerno. I don't think we've ever had Joe on the show before. If we did, it was a long time ago. And Joe's the guy behind the guy, you might say, right? If I get submissions and there's a question about the economics of it, when we're putting articles on the main page, if something doesn't seem right, I consult Joe. So Joe's kind of the last word on are the economics of this article sound? And so I will check with him, and he's really just, for the main page, which is designed for lay people, he's really the consultant that I go to make sure that what we publish works with sound and good economic theory. Now, don't blame him if something's on the site that you think went wrong. That just means we didn't send it to him when we should have. But that's, for me, in my day-to-day work, that's the role Joe plays. But Joe is our academic vice president here at the Mises Institute. He's really just in charge of that academic side of the Institute, which is, of course, really the core of the Institute as a primarily academic organization. And he comes to us from a regular job as an academic economist. For years and years, he taught economics at Pace University. He's now professor emeritus there after many years of teaching. And so he's here very often heading up our academic programs at the Mises Institute. So if you're interested in any of his works, just make sure and go to Mises.org. That's MISES.org. So, Professor Salerno, thank you for joining us.
It's my pleasure, Ryan.
Here today. I think I'm going to use the opportunity to talk to you as just a chance to really get back to some of the real basics about Austrian economics, because I know a lot of our audience, they come from a wide variety of different places. They're not necessarily regular visitors to Mises.org. They're not necessarily reading a lot of economics articles on our site. But so they may listen to the show and we reference the Austrian School a lot, but they may still be really vague on what that even is, what makes it different. So I'm going to ask you just a few questions here, just so people can get a sense of what does it mean when we say the Austrian School or Austrian economics, that sort of thing. So you come at this as someone who's from economics, that is someone who studied economics extensively, someone who I get the impression was just interested in economics for a long, long time, and then you began to become engaged with the Austrian School. So I think just really my first question for you is that while you were studying economics, what was it about the Austrian School that really grabbed your attention?
Well, I became interested in economics actually in high school when I was given an assignment to read Adam Smith's Wealth of Nations. And what struck me was the fact that you could say definite things about society and the economy, that there were laws of social interaction. It wasn't just natural laws, there were these other laws. I just picked that up. I mean, it was hinted at in Smith, and I liked that. And it was my senior year in high school, and I never really thought about doing anything else than becoming an economist from that point on. So when I got to college, I became, I declared a major my sophomore year in economics. I never really thought about any other major. But what got me interested in Austrian economics, I was a free market conservative in high school and into college. And there was an article written in the New York Times Magazine, which was called Libertarianism, a Right-Wing Credo. And in that article, I was becoming a libertarian at the time. In that article, that they mentioned the dean of the modern Austrian School, Murray Rothbard, who I had never heard of before. So since I had joined the Young Americans for Freedom, which was kind of a conservative/libertarian organization at my college, Boston College, I mentioned this name, Murray Rothbard, to the other, my fellow members. And one of them pulled out a small pamphlet called Economic Depression's Cause and Cure. And now I had taken principles of economics, and I was going through intermediate courses in macroeconomics, microeconomics. And I sat and I read that in 45 minutes, and I realized everything I had been taught was just incorrect. It started from a flawed foundation. Rothbard was trying to determine laws that govern a business cycle. And in very clear language and in a very short pamphlet, he conveyed to the reader, to me, that Austrian economics, and it wasn't, he didn't use the term Austrian in there, or he may have just referred to Mises and Hayek, but that Austrian economics had an explanation of real phenomena in the economic world.
And, well, you kind of got into it a little bit about some of the initial texts that really drew you in. And so what would you say now, for someone who's young now and really maybe just starting to notice economics as a discipline, where would a good place be for them to start reading, and who to engage with that?
Well, I can't overemphasize that Hazlitt's Economics in One Lesson is a great starting point. It gets you very interested in the various ways that you can apply economics to everyday problems and issues and interventions by the government. But beyond that, in my own reading, I read What Has Government Done to Our Money pretty quickly after I became sort of interested in the Austrian School. And then the pamphlet that I mentioned, Economic Depression's Cause and Cure. And then I would recommend for today's more modern text is How to Understand the Economy by Per Byland. I think that's very, very good. And then what was interesting is that as I've gone on, I realized that I was starting to read some applied Austrian work. So if you're saying that Austrians give a realistic explanation of real world events and phenomena, then you should look at America's Great Depression. I read that pretty quickly after I read some of the introductory material. It's pretty easy to understand. And also, a forgotten economist now, Dominic Armentano, wrote a great book, Antitrust and Monopoly. And that also shows or demonstrates how Austrian economics can be applied to explaining events in the real world. And I would also mention our own Mark Thornton and his work, The Economics of Prohibition. So it's important to see that Austrian economics is applicable to the real world in a way that is not true of the economics that you're learning.
Well, and something that I also think needs to be mentioned is often I see people use the term Austrian economics to denote a certain ideological bent, for example. And they're not necessarily referring to a school of thought, right? A scholarly or academic school of thought. But that is how we are approaching it, right? We're approaching Austrian economics as economists in many cases because we think it's the best way of understanding economics, right? I mean, this is, we've chosen it because we feel that it explains things and has the best explanations for economic phenomena.
Yeah, Austrian economics tells us what is, not what ought to be. People often conflate Austrian economics with libertarianism. Libertarianism is an ideology. It specifies what we think should be ideal in terms of people interacting with each other, in terms of justice and in terms of results that most human beings prefer, prosperity, peace, and so on. But Austrian economics is all about the economy. And I might want to say a word about the term Austrian. The Austrian school initially more or less died out, or it was, and some of it was absorbed into mainstream economics. By the 1920s, early 1930s, the term wasn't used as much anymore, the Austrian School. And after World War II, people like Murray Rothbard and Ludwig von Mises, in their writings, they talk, in Rothbard's initial writings, as well as Mises' writings, they talked about the Austrian School as a chapter in the history of economic thought, as referring to Menger, Baumbawerk, and Wieser, the original founders and the followers of those founders. But then in 1974, when Friedrich Hayek, who was a student of Mises, or follower of Mises, won the Nobel Prize, and there was also a conference in the same year, the first conference in Austrian economics on North American soil. At that point, there was a coalescence. The people were coming together. There were graduate students there at this conference. There were young faculty members. They had been reading Rothbard. Rothbard had published a number of books in the early 60s that were very influential in getting people to learn about Austrian economics and to want to pursue it academically. So once that happened, we had the reintroduction of the term Austrian to distinguish what was beginning to be a growing and flourishing movement from mainstream economics.
And I mean, I suppose even some of our listeners, they almost never think about different competing schools of thought in economics or any other discipline, right? So I suppose for some of our audience, we have to make that distinction as well, right? There's never, in any academic field, there's never just one way of thinking about things, right? There's many different competing schools of thought. There's disagreements over theory. And the Austrian school is one of those schools. It's the one we agree with most, but certainly it's something distinct. It's people who are trying to explain things in a slightly different way. And we do see that in its effects playing out in terms of trying to explain phenomenon in the real world, right? Is that some theories we think explain phenomenon well and some kind of miss it. They don't really explain things at all. And I think that applies then to one issue that I think we should be aware of here is one thing that I've remembered and which has been pretty well papered over is that after the last financial crisis and recession, right, 2007, 2008, there should have been, and it almost happened, but not quite, a real crisis for the mainstream economics community in the sense that their theories did not really anticipate or explain what happened with the financial crisis, and I don't think they've done much to explain in terms of what's going on right now with inflation, for example, price inflation. And they told us for years, right? Oh, we can print up $6 trillion. It's not going to lead to any significant price inflation. It's not going to be a problem. Everything will be fine.
Yeah.
And that reckoning didn't seem to happen, though, because I guess they managed through bailouts and a lot of monetary inflation managed to just keep Wall Street happy, and people weren't then angry about the economics profession not really helping at all in terms of understanding things. So when it comes to understanding those sorts of things, can you tell us a little bit about how the Austrian school perhaps offers a better explanation of business cycles and what we might look for going forward in terms of how can we identify what's going on with the economic situation right now, and maybe there's some clues as to where we're headed. I mean, really just kind of give us a sense of if we're trying to understand recessions and booms and all that, which I think interests a lot of people. I mean, those are often our most popular articles and subject matter and everything. What is different about the Austrians? Does the Austrians give us a little bit of an edge in understanding things better?
Yeah, I think we do. Let me just go back for a moment to the financial crisis. In an interview in 2005 on Charlie Rose, December of 2005, right before the financial crisis began to hit, right, when people were seeing a financial bubble, and Austrians were calling what we had a housing bubble. Milton Friedman, who was a leading empirical economist, an economist or a leader of the school that believes that you can create economic theory by testing it against the data. He was on the Charlie Rose show, as I said, and he claimed that we were in the most productive and the best period of the American economy that in his lifetime. And he praised in glowing terms Alan Greenspan, the chairman of the Fed. And here we were on the precipice of the explosion of a housing bubble that was going to turn into a financial crisis 2 years later. And he had no clue that that was the case. Whereas people like Peter Schiff, our own Mark Thornton, and a number of others, in 2003 and 2004, they were calling for, or they were pointing to the fact that we had a growing housing bubble. Now, the way they did that was because they understood Austrian economics, which begins with human action and deduces a lot of theorems, and way down this chain of deduction is a business cycle theory. Business cycle theory comes out of those theorems that are developed from the human action axiom. So it's grounded in reality, and it explains reality. If the logic is correct, and it's not always, people have to go back and check the theorems and so on, then we have real things to say about what's going on in the real economy. That is, we have different conditions. So the conditions for Austrian business cycle theory is that there has to be an increase in the money supply that drives down the interest rate that below the rate of profit that is being earned in businesses. You'll have excess borrowing of this newly created money, and that will bring about a disproportion in the production processes. Some will grow more than others, inconsistently with human wants and desires.
Well, and it just seems that in the discussion of it, there's just so much confusion, right? Paul Krugman, for example, right? I mean, he throws out all sorts of bizarre theories, like the hangover theory, and will accuse Austrians of believing that it's some sort of moral theory, that, well, if you party too much, then you have to have a recession to correct things afterward. And so we just hear all sorts of stuff like that. And I think a lot of people who think about Austrian school economics, they get confused because they hear about all of these bizarre things that people throw out to try and pin on us. But, I mean, really, I mean, why is that wrong? I mean, what would you say to someone who says, well, what goes up must go down, I suppose, and...
Yeah, the Austrians don't say that at all. I mean, we look at the conditions that are specified by a theory, that if you create new money, you're going to distort the interest rate and mislead entrepreneurs into producing things that are not as urgently demanded by consumers. That is, you're going to be fooled into thinking that people want to save more for the future, and therefore they want to invest more in capital goods today, and that they're willing to postpone some more of their consumption into the future. That's not a what comes up must come down, that we splurge too much in investment spontaneously, okay? No. Entrepreneurs generally do not make mistakes. A small minority of them do, and they go out of business. There's a selective process in which entrepreneurs who are bad, who do not forecast the future accurately, are driven out of business. So why suddenly do we have what Murray Rothbard called a cluster of entrepreneurial errors? Why suddenly do all entrepreneurs make mistakes, or almost all of them, and have their businesses going bankrupt? That question is not answered by the mainstream, by the Keynesians, by the monetarists, by the new classicals, by anybody besides the Austrians. The Austrians explain why entrepreneurs can all be misled at the same time. And that is something external to their calculations that distort their calculations. And that external thing is the manipulation of the interest rate by the Fed.
That's an important point, right? Because a lot of times the explanations for whether it's speculation in the marketplace, it's price inflation, we'll be told it's greed. And right, so and that's the important factor about, no, there is something going on outside our mental activity that is affecting us. Because otherwise, you could just say, well, something happened. There were animal spirits that caused us all to be greedy all of a sudden. And so then a bubble produce, right? So importantly,
Yeah.
Austrian economics has no animal spirits, right?
Yeah.
We're focused on actual phenomena.
Yeah,
right?
animal spirits was a term, an infelicitous term, not a very good term, coined by Keynes for and applied to business people. That suddenly business decision makers would all become very optimistic, like a horse who's, you know, kind of calm and standing around, and then suddenly he'll take off and run, right? That's animal spirits. But suddenly they become so optimistic that they're willing to forget all their calculations and all their experience and invest wildly in projects that are going to fail. And then of course others pick up these spirits and then jump on the bandwagon. That's nonsense. I mean, it's not an explanation at all. That's a deus ex machina. That's the God coming out of the machine and saying, okay, this is what caused all that. The Austrians have a worked out explanation for the cause.
Well, and to the issue of business cycles, right? That's often just been a topic of discussion around here. We're meeting here. The reason there's a live audience here is because we're at Mises University here in 2025. So we've got a lot of mostly undergraduate students here who are getting a fairly extensive introduction to the Austrian School here. And I came to this program back in 1998. And I remember at the time, in the hallway, it was Richard Vedder at the time.
Okay.
And he was reading an op-ed from the Wall Street Journal, which had declared that we have conquered the business cycle. And there will never be another recession as we know it. Now, of course, that was in 1998, and then there was a recession in 2000, right? Just 2 years later. So at least we were proven right fairly quickly in that case. But right, I think part of the problem we have with people is that they're looking around and it seems like the Fed, man, it really knows what it's doing. I mean, wow, look at all these years of growth and everything's great. And so how can you say that we haven't conquered the business cycle? What reason do we have to think that it's ever going to happen again? What do you say to people who are saying, well, everything, heck, we've been inflating like crazy since 1971. The standard of living continues to go up. Everything looks fine to me. What's with you people? You people have called 21 of the last 3 recessions, right? What do you say to those people?
Well, I mean, it's as Richard Vedder said back then, it's always been the case that when economists think that suddenly they've hit upon a new policy, that they've abolished this business cycle. So Irving Fisher, looking at the end of the 1920s, said, well, like during the 1920s, prices, consumer goods prices and wholesale prices haven't changed. They weren't looking at the stock market. Of course, there was a stock market boom, and commodities prices were going up, but they haven't changed. So he made the statement in 28 or 20, yeah, maybe early 29, I think it was 28, that the business cycle had been permanently abolished, that there would be no more, we entered, he used the term, we entered a period of perpetual prosperity. And of course, a few months later, the Great Depression hit. And the same thing happened in the 1990s. From about the mid-1980s through the 1990s into the early 2000s, economists began to see that we had low inflation, not no inflation. We had low inflation, 2%, 3%. And compared to the 70s performance, that was a good performance. So they began to say that the Fed knows how to manipulate the interest rate so that we have a great moderation. So they call the period before the financial crisis the Great Moderation. Of course, they were not looking at asset prices, which were exploding, especially housing prices. Again, they were just looking at the consumer price level. And this all goes back to a theory that still has, unfortunately, a hold on even conservative economists, and that's the quantity theory of money, which is completely wrong and at the root of a lot of the problems that we have today.
Well, you know, that brings us a little bit to Friedman and some of the other issues we've touched on is, right, we're concerned with real-world phenomenon and how do they affect people's perceptions of the economy and their human action. And really, we're always trying to apply economics to the real world and understand it better. And nevertheless, in spite of that, I often will get, if I run an article, say that touches a little bit on the Austrian School, but I look at, say, a lot of measurements about what's going on in the economy, say about price inflation, say the money supply. Now, a lot of those measurements are, right, government stats, they have their own issues and all of that. But often we'll take, especially when we're looking at economic history, We'll look at statistics. We'll look at economic data about what was happening. Let's just say something like home sales, right?
Yeah.
And you publish that, and that's not even a model. You're just counting things up in that case. So even a real simple thing like that, population growth, heck, and you're looking at the relationship between population growth and, say, housing production or something like that. I publish it, and then inevitably I get emails from people saying, well, I thought you economists don't believe in math, in quantitative anything. Why are you even looking at the size of the population? Why are you even looking at any of these numbers? And that's a fundamental misunderstanding of what it is we're trying to do. Can you explain to us the difference between, examining real-world phenomenon and using numbers to do it, and then also this idea that people somehow got into their heads that we're not using mathematical models? Those are two different things.
So a mathematical model is a way of testing an economic theory with empirical data. Austrians don't want to test economic theories. We know because our theory is grounded in human action axiom and deduced with logic that we don't need to test those theories. It's like proving that water runs downhill. There's two reasons to use math in economics, according to the causal realist economists, the Austrians. The first is pedagogical. If you look at Murray Rothbard's Man, Economy, and State, it's used as a pedagogical device. It's peppered with graphs, geometry. Geometry is very useful for explaining theories that have already been deduced. So it's an important and useful pedagogical tool. And the second use of math is in the applicability, determining when a particular theory is applicable. If we see the Fed suddenly reducing interest rates rapidly and the money supply expanding, we know that those are the conditions under which the Austrian business cycle will unfold and lead eventually to a depression or recession. So one other point about math, Austrians don't add up apples and oranges. So we add up things like the money supply, or we look at prices of certain goods. All of that is fine. It doesn't violate mathematical laws. Mathematical economists regularly violate laws of math by adding heterogeneous things together. So.
Well, I mean, this brings us, one of the classic cases I point people to when they say, well, what are you using any sort of quantitative analysis for? I say, go have a look at Rothbard's Great Depression book, America's Great Depression, right? He's doing a lot of economic history there. He's really analyzing what's going on with the money supply in that period. And I would just take an aside here and note that at Mises.org, in case you're interested about money supply and its movements and what it tells us, check out our regular articles that we have, mostly every month, about money supply. Now, we have different measures of it, and we don't use M2 because decades ago, Rothbard and Salerno, I call it the Rothbard-Salerno money supply measure, because I think that's the most accurate, because other people have different names for it. There more than one person claims to have the Austrian measure. But if you go to our site, check out the Rothbard-Salerno money supply measure, and we keep track of it. We keep track of what's going on with the money supply, because that has effects on what's going on in the economy. It's not we have a lot of confused people who think it's a one-for-one relationship, right? The money supply increases by $1, inflation increases by some fixed amount.
Fixed amount, right.
Right, yeah, we don't believe that, but we still keep an eye on the stuff because that's something that's important in the real world. And Rothbard looks at money supply, and he's using a slightly different measure in that case because it's real historical data. But I mean, that's probably like a good example of how to properly do that sort of quantitative analysis, right?
Yeah, not only that, that's the macro level, and that's very important data to use. But also, if you look at the book Antitrust and Monopoly by Dom Armentano, which we do sell here, in that, he challenges with empirical data the mainstream theory of monopoly, which says that, and the mainstream economic history of monopoly, which says that back in the late 1880s, 1800s, during the period of the robber barons, these large firms were cartelizing and monopolizing the economy. Now, what do we mean by monopoly? By monopoly, they mean, and Austrians mean too, that they were restricting supply and raising prices. They were reducing the amount of supply deliberately so that they could make goods more scarce and raise prices. Well, Armentano went back and studied, I don't know, 17 or 21, I don't remember how many cases, famous antitrust cases, and he found that in every case, he looked at the data, that quantity was increasing, every case in which was brought against a business firm, quantity was increasing and prices were falling. That's another way to use economic data, and he does it very, very well.
Well, Professor Salerno, I think that's about it for this episode. I should really have you more on more often, and we can cover
Yeah, you should.
some other topics as well. I think maybe I think the Austrian School really thrives in times where there's a lot of economic disturbance and things are really crying out for a better explanation than what the mainstream is doing. And well, I used to work for the government as a government economist, and you got calls all the time when the economy was terrible and home prices were in disarray and stuff like that. And then as soon as the economy seemed calm and stable, nobody called, right? Nobody's interested anymore.
Right.
And so I think as I'm looking out there, and I'm not saying you agree, but as I'm looking out there, I continue to see a lot of bad economic news, stuff that I find rather alarming in many ways, and I think which also affects a lot of young people, impacts them substantially. So I'm hoping to have you back on, or maybe we can talk about some of these things as things progress into the next couple of years. But thank you very much for coming on today. Thank you to our audience for joining us. We'll be back next week with more, so we'll see you next time.
Thank you.
1 minute. All right.
This is the Human Action Podcast with your host, Dr. Bob Murphy.
All right. Well, welcome everyone to the Human Action Podcast, a live recording of that. I'm here in Auburn, Alabama, and I should mention that those are asking. I'm wearing the legendary Lou Rockwell T-shirt, and I should say I've been wearing this out just about upstate Massachusetts. I was in a Walmart and these two kids were walking by, and the kid said, "Nice shirt," and it was this one. So Lou Rockwell's fame extends even into liberal Massachusetts. I just want to report that. And the kid had a girlfriend too, so he wasn't even a socially awkward guy. So it was extra reassuring. So what we're going to talk about today is what's called stablecoins. So my guest is Jason Priddle, who's a PhD student at Florida State University, and he's a summer fellow here, and his research focuses on what's called stablecoins. Let me just mention as a preface to this discussion, it's here, obviously I'm biased, but I cannot express how much, having studied the taxonomy of different types of money that Mises laid out way back in his theory of what we call theory of money and credit, has equipped me just to be able to wade through all these discussions among not just, like crypto bros building, tech entrepreneurs, but even professional economists when they're asked about, well, what do you think about the Genius Act, or what do you think about Bitcoin and things like that, and people just throwing around terminology and statements where it's clear they don't have a solid theoretical framework for thinking about money and banking. Okay, so you can quibble and say maybe Mises was wrong, but the point is it was a very systematic foundation. It's a good starting point, and then you can try to see like, well, geez, where would Bitcoin fit into there and so forth. So I really just benefited from that, because you'll see people saying like, oh, money is really just like energy, and it's like, well, no, money's not energy. It's not the same thing. Or they'll say, money's like all on a ledger, and well, no, gold and silver coins weren't. So I'm just saying that the Misesian framework has proved very useful to me to go through this as I grapple with these issues with other economists. So I think, Jason, before we dive into like some of the particulars for those here in the live audience and at home who are curious about the Genius Act, for example. So for context, the so-called Genius Act, let me read this before I forget. There's always these silly acronyms. It's Guiding and Empowering Nations' Innovation for U.S. Stablecoins, the Genius Act, right? And some might wonder if it's as much of a Genius Act as the Patriot Act was patriotic, but that's what we're talking about. That's like sort of the news hook, because that just was signed into law a couple weeks ago, and that has to do with regulating stablecoins, as the name suggests. So that's sort of the news hook for what we're doing, but obviously we're going to talk more broadly about how does the rise of blockchain-based finance interact with conventional, traditional finance, or TradFi as they call it. And with all this stuff, like I said, someone who's armed with the theoretical framework of Misesian economics is just able to navigate this stuff. But before we get too hip deep into all that minutia, can you just start, Jason, and explain what's the difference? Like a stable coin is not the same thing as a cryptocurrency. And so can you maybe explain theoretically what those things mean, and then give some examples just so people can, put items to a category?
Indeed. So stablecoins are effectively the medium of exchange for the cryptocurrency economy. Most precisely, they're a cryptocurrency token. I'll get into that in a sec. But they have the functionality of being pegged to the dollar, hence the name stable, of course. And they also run on this, let's call it a business model of so-called fully reserving all of the given deposits that people who are interested in using the stablecoins would deposit, and backing those deposits with more or less fiat equivalents. If it's a stablecoin on the dollar, they would back their assets with dollar equivalents. Regarding particulars, for example, a difference between, say, Bitcoin and Ethereum compared to the next largest stablecoin, Tether. Tether is a token in the sense that it's an app that functions on the second layer or on another layer of an existing cryptocurrency network. So a most common sort of fiat to Tether to back to fiat example might go something like this. I would deposit my fiat into a centralized exchange such as Coinbase, Kraken, Binance, exchange it there for Tether, then deposit that Tether into my personal wallet, on-ramp that personal wallet to the Ethereum network. In previous days, more common Bitcoin, but other cryptocurrencies that you might have heard of, such as Tron, Cardano, et cetera. So you would on-ramp the token, the stablecoin, to Ethereum network as an example. Then that's where it has its highest levels of functionality so that I can trade in and out of, let's say I'm speculating on Ethereum, I could trade in and out of Ethereum using the dollar as my trade pair, my hedge. Also, if another user is on the Ethereum network, I could simply transfer whatever Tether balance I would like to them on-chain very quickly, as well as they're also commonly used internationally in places with less stable currencies for what economists would call hoarding. Yeah, that is to say, if I want some sort of monetary stability for my cash balance, I might just hold it there in my Tether wallet, for example, on the Ethereum network. Once I'm done with my given function that I think I'm interested in, then I would off-ramp it from Ethereum, put it back in the centralized exchange like Coinbase, for example. And then if I want my fiat back from there, of course, I would sell it for fiat, and then it's back in my checking account. That would be probably the quickest example of functionally what stablecoins do look like.
Okay, let me, in the beginning here, folks, just forgive me, but I'm going to sort of paraphrase. So what you're saying is, but I will hopefully be faithful to the spirit of that, because thank you for that. But for people who are really new to this, let me just make sure. So and obviously correct me if you think I'm saying something.
That's good,
we checked notes beforehand, folks, to make sure he and I define terms the same way. So I think we're on the same page. But what people usually mean by like a cryptocurrency, something like Bitcoin was the original one, right? So it's this abstract digital token, if you will, that lives on a blockchain, and people are just transferring control over these things through the use of their private keys, and they can kind of signal, it's a public ledger, they can kind of signal to the rest of the world that I'm the rightful owner of this thing on this ledger, and someone's going to give me a car, so I'm going to tell the people that control the ledger, move some of these units to this address over there, right? But it's not that the Bitcoin is pointing to something else in the real world. It doesn't entitle you to anything. It is what it is. It's its own thing. And if enough humans abide by the convention that, oh yes, I would give up real goods and services to have the person who has the private key that can move that thing around on a ledger to move it to my account, then I would go ahead and do that. If enough people do that, then fine. You can sort of, build transactions around that. But it is its own self-contained thing. It's not that Bitcoin is supposed to be maintaining its value with something else. Whereas with stable coins, they also are digital tokens that live on a blockchain, and they're moving around the same principles. But the point is their whole purpose, as the name suggests, is the stable in stablecoin means its market value quoted in a major government fiat currency like the dollar primarily, but also there could be like euro-based or yen-based stablecoins in principle. That's what it's supposed to do. So it's like the same type of thing as Bitcoin, except instead of just being its own deal and it could fluctuate against the US dollar, against the euro, its whole purpose is there's mechanisms in place to keep the market value of this thing pegged to $1 US. All right, and Tether and what Circle are the biggest ones for USD-based stablecoins?
Exactly.
Okay, so before we keep going, can you explain, because this occurred to me years ago, and I think maybe some people who are new to this might be wondering, initially, for sure, a lot of the premise or the promise of Bitcoin, and then Ethereum and blah, 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 all these other altcoins was, oh, you don't want to be stuck with this garbage government-issued fiat money. Why don't you switch to something private and decentralized that can't be inflated at will, like Bitcoin? And so someone might say, wait a minute, so they're going to have this blockchain-based thing that is designed to maintain its value with the U.S. dollar, doesn't that defeat the whole purpose? So can you explain why would anybody who likes crypto in the first place want something that's tied to the U.S. dollar's value?
Most directly, again, as I hinted at the first use case, if I'm interested in hoarding and or speculating, for example, on Bitcoin, I want Bitcoin to go up in price, and I'm interested to eventually realize some of those gains. I would like a quick money to then deposit that or exchange that Bitcoin for and deposit that Bitcoin into when I'm ready to trade out of Bitcoin. So that's sort of the functionality in terms of why. Sorry, everyone.
Uh-oh. Klaus Schwab is on to us.
Yeah, he doesn't want to talk about freedom money, yeah. So, sorry, everyone. So let me try to continue here. So effectively, yes, the most important functionality of why someone who's interested or into, let's say, again, I'm just using them, I'll probably come back to this example of Bitcoin and Ethereum because they're the top and most popular too. People who are interested in speculating on Bitcoin and Ethereum, they like this fixed, stable trading pair to realize their gains when they're speculating on the Bitcoin and the Ethereum.
Okay, so again, I won't keep doing this. I won't keep translating his answers, but I am going to in the beginning just to make sure we're not losing people at step one here. So the idea is, yeah, you have your digital wallet that you've got your Bitcoin, your Ethereum, all these other sort of even more obscure niche crypto coins, tokens that you might want to hold. And then as Jason's saying, let's say Bitcoin's way up, and so maybe you want to quote take profits or just diversify away into something else, or you want to move. You want to rebalance your portfolio and go partly into cash, right? This is a very typical way that people think when they're managing investments and so on. Because, yeah, even though you might still think Bitcoin's on a tear, once you're up 200%, you might say, I'm going to be sick to my stomach if the thing drops 40%. I want to, move some of it out and pocket some of my gains, take some money off the table, right? These are all common ways of speaking. And so before the rise of stable coins, what you would have to do if you wanted to do that, in other words, if they're just crypto currencies out there in the wild, you got your Bitcoin, you could sell some of your Bitcoin and trade it into Ethereum, like directly, just find people who have Ethereum and want Bitcoin and vice versa. But Ethereum itself was very volatile vis-a-vis the dollar. So if you're somebody based in the United States and your daily life is, you're immersed in dollar-based transactions, you're still, the Bitcoin enthusiasts don't like this, but you're still thinking in terms of dollars. Like, I got to pay my rent. This is how I pay for food. So if Bitcoin goes from $1,000 to $10,000 per Bitcoin, you're thinking, oh, I'm way up. You're not just thinking the rest of the world had sudden deflation vis-a-vis my money, Bitcoin. That's not how you're thinking. And so, again, people, before the rise of stable coins, the way they would lock in their gains is they would have to go to an exchange, sell them some of their Bitcoin in exchange for U.S. dollars to get wired, to like their checking account. And that could take days for all that to clear and everything. It was just a big hassle. And then if conditions changed and they wanted to get back in or they wanted to go into a different cryptocurrency, they would have to then wire the funds back in, get their dollar thing credited. And then, so it was just very laborious. They were sort of like going in and out of the blockchain world, back and forth between like traditional finance and banking and then blockchain-based stuff. Assets. And so that's when people realized, oh, this would be a lot more convenient. We could just keep our wealth for our crypto or our blockchain-based portfolio. We can just have it live permanently on blockchains so long as there was some outlet that if we exchange it for those types of blockchain-based coins, then those things were going to stay stable relative to U.S. dollars, the most obvious. But again, if you were in Europe, maybe you'd want to be something that hold its value relative to the euro. Okay, so that's kind of where these things came up, and then it's just mushroomed. I don't want to put, do you know the market? I don't know the market cap off the top of my head. I used
250 billion thereabouts, 250 billion, 260 billion among all the stable coins. Among the top two, it's about 230.
Billion?
So 230 billion between the top two.
Just to make sure everyone's getting what he's saying, this is not like, some kids in their basement doing stuff over here. This is
That's right.
$230 billion, just the top two stablecoin issuers in terms of what people are around the earth holding in their digital wallets or, custodians on their behalf, whatever, that's how much of this stuff that's, pegged to the US dollar, that's the nominal value of that right now. So these are huge amounts of assets that are every day, becoming more and more mainstream among institutional people in the financial sector.
Yes.
Okay, one last sort of definition, the concept, before we get into some more of the particulars of the Genius Act. There's also this thing that people have been talking about a lot called a central bank digital currency, or CBDC. Can you explain how does that relate to what we've been talking about so far?
So mostly, it's interesting too when I bring up that I research stablecoins, even in finance and econ academia, I say, I research stablecoins. And inevitably there are people who, right away confuse them for CBDCs. Oh, which country issues that one? That kind of thing, right? So let's kind of, we've Dr. Murphy's helped me. We've kind of given a reasonably robust intro to stablecoins, particularly. CBDCs would be a digital currency, not necessarily blockchain related, issued by the government, more so for the ethos or the purpose of probably trying to manipulate, control deposit exchange habits among their users. There's all kind of different hypothesized functionalities of what they would do with the central bank digital currencies. But as stablecoins stand, they're a distinct thing. They're not an immediate channel or on-ramp to central bank digital currencies, but I'm sure as the podcast goes on, we'll talk more about that.
Okay, yeah, so again, just conceptually, a CBDC is distinct from a stablecoin, even though on the surface, like if the Federal Reserve or the U.S. Treasury were to issue a CBDC, it would presumably be tied to the U.S. dollar, right? At least at the beginning. And so you could say, well, wouldn't that be, so yeah, that would be stable vis-a-vis the U.S. dollar, but in all other respects, they're different. So that's why conceptually we're distinguishing them. And also, again, to be crystal clear, up to now, the stablecoin issuers have been private companies.
Yes.
All right. And so now that we've sort of given you the terrain, what recently happened is the so-called Genius Act was this signature legislation that they passed it quite quickly, and then Trump just signed it into law like 2 weeks ago. That's regulating U.S. or dollar-based stable coins that are going to be marketed to U.S. citizens, right? So anybody who wants to issue stable coins that Americans can hold, that's what this regulation touches. And since the U.S. is such a big market, this is kind of now defining. This is the gold standard, no pun intended, is for what stablecoin issuers are going to have to do. And so, do you want to list some of the main elements of it?
Sure. So I think if we watch, let's say, business news, and even policy advocates from the White House or from D.C., the quick talking points that you'll hear about the Genius Act is, okay, we're going to provide regulatory framework for the stable coins to help depositors feel confident in their deposits. We're going to limit the type of short-term finance word, cash equivalent assets that they can, keep on their balance sheet, as well as again, in D.C., they'll hype them up as, this is a new demand for U.S. Treasuries, or a growing demand for U.S. Treasuries. It's going to strengthen the dollar around the world. So these are the sort of talking points from the media and D.C. Like, practically, some of the specifics of the Genius Act, as I mentioned, to issue stable coins now in the U.S. and probably for them to functionally work across the different centralized exchanges, they're going to have to comply with a certain decomposition of their assets. That is to say, the assets they hold to back the stable coins are going to have to be deployed into either short-term, 3-month, or 93-day U.S. Treasuries, cash or cash deposits. We can get into the monetary dynamics of this, money market funds that fulfill certain requirements, and overnight repurchase agreements. Again, that's kind of deep down the money markets rabbit hole, but I'll just give Dr. Murphy a plug on his book. If you're interested in going down the details of these different specific dynamics that are so-called safe assets, you can go to the Understanding Money Mechanics book. But those are probably the main details that I think are, legally relevant for the Genius Act.
Okay, great. Yeah. So the context here, and it's the irony. We'll touch on this in a minute. You have people like Elizabeth Warren, who was railing against these wildcat unregulated stablecoin issuers. This is like shadow banking. And I'm going to ask you in a second, Jason, to elaborate on that, because there is a sense in which, that does kind of seem like a bank. Like, you transfer in your dollars from like your regular Citibank checking account or something onto this exchange, and then on your online digital wallet, you're buying these tokens that are supposed to maintain their value. So it's almost like this third-party company, you have claims they've issued that entitle you to US dollars. And yet more and more people around the world are accepting those things in transactions, the claims, the stable coins. So if you think about that, that is kind of like banking, right? Whereas, you put your Federal Reserve notes into a checking account and then you're walking around town and Citibank owes you money. And then that's what you're able to buy your groceries with and stuff. You're transferring the liabilities. So there's that element. And so what people like Elizabeth Warren and others were complaining about is, hey, this is unregulated. As people pile into this new stable coin thing, they're going to assume that, these issuers are backed up, that, if they have all these claims outstanding saying the people who hold these things, these are supposed to be as good as dollars, but what do they have in terms of their assets? And so what the Genius Act does is it says if you want to do it and at least sell the U.S. market, you have to have 100% reserves. And by reserves there, they have a very stringent definition. It's not just, let me take a minute to explain, when it comes to banking, to say you have 100% reserves doesn't merely mean your assets are higher than your liabilities. That's got to be true for any company, for whether it's banking or a pizza place, to say you're not bankrupt, all right? To say you're solvent means your assets are higher than your liabilities. But when it comes to banking, and we talk about what kind of reserve ratio do they have, what you mean is for all the people in the community that have claims on that institution, thinking, they have this, quote, many dollars, if we're talking about dollars as being the money here, how many immediately accessible dollars does that institution have if the people wanted to redeem the claims for that, right? So a regular commercial bank could say we're solvent, our assets are higher than our liabilities, but if they have $1 billion in outstanding customer checking account balances and they only have $100 million in actual cash in the vault, that's only a 10% reserve. And even if they have $900 million worth of mortgages on their books, they can't say, oh, we have 100% reserves, right? They really only have 10%. Right, so the Genius Act imposes on stablecoin issuers 100% reserves, and the only things that can count as reserves are stuff like actual checking balances with Citibank or whatever, or as Jason was saying, treasury securities that only have 93 days or fewer left to maturity. Right, so really short-term debt instruments issued by the federal government. So they can't even have like AAA corporate bonds or something. That wouldn't count. Okay, so it's a very stringent requirement that they're not imposing on commercial banks, right? So it's just ironic that people like Elizabeth Warren and others saying, oh, we got to have consumer protection in here and have these stringent requirements. The commercial banks are allowed to do all kinds of crazier stuff by their own standards. Mm-hmm. So that's one of the, so I'll stop there. Do you want to comment on, I'll say one thing, you can either agree or disagree. So partly what I think is going on here in terms of the Genius Act is, as Jason said, number one, and this is what the people like in this space will say is, hey, at least we have regulatory certainty. And what they mean by that is, if we're building this kind of stuff and we're spending tons of money, with our computer programmers and we're getting our business model and our marketing materials and we're talking to a potential investor, we don't want to go through 4 years of that and then the SEC or somebody just issues some new rule change and pulls the rug out and our business model is illegal. So people were very timid, and under the Biden administration, there was outright hostility. Right? People may know the name Caitlin Long. She's a friend of the Institute. Has, I think, presented papers here and so forth. She went through a nightmare just like trying to get her bank that she wanted to have 100% reserves for certain accounts, and the Fed wouldn't approve it. Like it should have been a standard open and shut application. A lot of hostility. Then she's just uncovered all sorts of, I think someone was doing like a FOIA request or whatever, to realize that there really was this vendetta against people building in this area during the Biden administration. Like if you look, they called it Operation Choke Point. Okay, and I had people telling me behind the scenes, like some guy who owned a bunch of Bitcoin miners, right? So in other words, he had warehouses full of computers that are sitting there solving math problems and mining Bitcoins. It's perfectly legal. He paid his taxes. He did all the paperwork and everything, and just his regular bank, he had trouble setting up an account. Just weird. He kept having bad luck. Just stuff kept happening, and he's like, I can't prove that this is because I'm in Bitcoin mining, but I think it is. Just weird things like that. And anyway, so Caitlin Long has uncovered a lot of stuff showing that we're not just inventing this, that this really was this hostility, and the people in that area think it's because the Biden administration people knew that, oh yeah, we've got this burgeoning sector of market-based money in banking, and they kind of wanted to put the brakes on that and have a chilling effect. Okay, so the proponents of the Genius Act say, at least now we know what the rules of the game are. Okay, everybody can be confident. We're going to build with these rails in place. We kind of know what the rules are. Fair enough. I think, and then I promise I'll let you talk, Jason.
Oh, good.
I think that part of what they're doing, though, is the regular bankers were afraid that, geez, these stable coins are very convenient, right? It's 24/7. The clearing is like within minutes. You know what I mean? Like you can send $50,000 worth of stuff to somebody in Singapore on a Sunday, and you can be sure that thing went through. 5 minutes later, you can be sure. Whereas you don't have that kind of possibility with conventional digital-based online banking right now. All right, so I think the bankers were worried about that. So what the Genius Act does, it sets up these stringent reserve requirements, and also, thing we didn't mention, it explicitly prohibits the payment of interest to the customer, right? So that was one way that the business model could have evolved, is somebody could, for new stablecoin issuers coming into the sector, they could have said, yeah, we don't have 100% reserve banking, but if we're earning, 12% on our portfolio of assets, we can pass along, 7% to our customers. So if you have 100 stable coins that are supposed to trade for $1, a year later, they'll mint 7 more and give them to you. So now you have 107, right? That could have been something that was brought in down the road as competition, but the Genius Act explicitly prohibits that. So I think, among other things, they were like, hey, we can't stop this. The genie's out of the bottle, but let's at least put a fence around it so they're not going to compete with conventional banks, because they're prohibited from paying interest to their clients. And the people in this space, the most they can do is invest in T-bills. That's the highest yield they can earn from the clients sending them money, and then they get stable coins issued. All they can do is go park it in 3-month T-bills and keep rolling it over. So that's, we're kind of containing the threat. You want to comment on any of that?
Yeah. To piggyback off what Dr. Murphy's saying, one of the key developments too that I forgot to mention is maybe obvious of the Genius Act is now these coins that were designed as private money now have to have the Fed, the Office of the Comptroller of the Currency, partly the FDIC as their regulator, right? So they're basically sort of more or less, succumbing to the pressure of government regulation. There's a lot more details. They have to release monthly, I think, audits as well of their balance sheet, that kind of thing. Dr. Murphy made a great point in that fundamentally stablecoins, and really the ethos, or the original ethos of the crypto economy all the way back to Bitcoin, is as payment method, payment network that's meant to replace the banks and all of the moral hazard problems of the bank's central banking. So it is to say, most concisely, stablecoins are or were designed as a competition payment method to bypass the need for traditional banking channels. So now I think it makes sense what Dr. Murphy's arguing here. Yeah, the banks that rule the world and are cronies with the government, they have, their chance to now influence and say, okay, the genie's out of the bottle. At least we can try to control this sphere. Even more irony, you got J.P. Morgan Chase, you've got Bank of America, Citi, et cetera, saying, oh, we're going to launch our own stablecoin products. I'm going to come back to that point in a sec. So to me, the most striking irony of the Genius Act is it's the government revealing what they know that the power of the dollar privilege is. So they're basically saying, hey, stablecoins, you're now going to be licensed or commissioned to be able to issue these digital dollar substitutes, but we're going to restrict you such that you have to lend us the money via buying our U.S. Treasuries. Yes, so that's really kind of the power of the dollar. If we think from a big scheme, we understand that they'll pitch us and say, we are managing the money supply for the benefit of the public. I think this kind of ironically shows their cards in the sense of when new dollars are created, the government wants to make sure they come back full circle to facilitating government spending. In this case, via making sure that they buy the U.S. government's debt. Secondly, it is ironic that the large banks are eager to now adopt their own stablecoin products, because banking, more or less as an industry, it's almost synonymous with fractional reserve banking and, generally speaking, very risky banking. So the business model of banking is to take in very short-term deposits and then find the largest loans, longest-term loans that we can possibly issue, and then that's going to be our source of income as a bank. Well, if I'm a big bank, but any bank, if I'm adopting a stablecoin product for my depositors, let's say, and my depositors are going to choose, I'm going to choose this stablecoin product instead of a traditional checking account, what they're effectively choosing is to more or less constrain the bank and say, hey, you can't go take my checking deposit and then go issue a 30-year mortgage on it. You now have to, at the very least, keep it in some sort of, again, it's a finance term to say cash equivalent. There is an economic difference. Dr. Murphy may like us to go into more details about that. But effectively, the stablecoin products are sort of a natural constraint on the extent to which the banks can really function in the way that they're used to functioning.
Okay, yeah, great. So let me just elaborate on those two of the points Jason made there. So the first one about the debt, I do want to stress that in terms of from what I was trying to understand when I saw the Genius Act and tried to understand like all the different players and people at the table and who might have benefited and what they got in there, that I think among all the other stuff that we've said here, one sort of beneficiary of this is the U.S. Treasury, and that's why I think they could say, yeah, we're happy with this, and we think, let's push this thing through and maybe twist some arms behind the scene to get the thing to go, is because if you just think about it, we said a minute ago, right, that it's $230 billion is the market cap of just like the top two, right?
Yes.
So over time, that's going to grow, right? Because right now, still, this is kind of a weird thing. A lot of people, even traditional financial institutional money managers and stuff, they don't really know. It's like, yeah, Bitcoin, I heard about that. Maybe they have a little exposure, or they might not even be legally allowed with their charter to hold this kind of stuff, right? But over the coming decades, this presumably is going to get much bigger. And so notice if they're locking in right now that, anybody who wants to have USD denominated stablecoins out there needs to have 100% treasuries backing them up. Well, now they've just programmed in, they've got this huge growing market for people that have to hold treasuries going forward. So with the big, beautiful bill and all this stuff and the CBO and everybody's projecting that the outstanding U.S. debt is just going to keep rising as far as the eye can see, among other things, this is locking in that, we got a built-in market, probably going to pass $1 trillion in the next 5 years of firms that have to hold treasury debt and just keep rolling it over. So they're kind of building that in. So I think that's a big element of this that a lot of people aren't talking about because they're jumping right into the crypto angle. So there's that element as far as to understand how did this thing pop out of the process. But beyond that, I do want to talk about the fractional reserve banking stuff because that's probably the most relevant here at Mises U. And again, the function here, the point of this discussion and why we chose this topic isn't so much that we want you to know what's the four most important things that I think about the Genius Act. That's not the issue. It's more I want you to understand, I think this is a great, topical news hook thing to apply some of the principles you've learned this week. And so on that issue, again, forget blockchain stuff, just, 10 years ago or 30 years ago, how would somebody in Austrian have explained fractional reserve banking? And specifically, how would a Rothbardian have explained it in the U.S. context? You'd say something like, okay, people go... Let's just say we're using Federal Reserve notes, right? And the community is holding $1 billion in paper currency, right? Benjamin Franklin's, green pieces of paper with pictures of dead guys on them, right? That's the base money. Yep, it should be gold, but it's not. It's these green pieces of paper. The Fed issued those, okay. But now, more hijinks occur, right? There's more skullduggery afoot. That if you go with fractional reserve banking, again, in a Rothbardian framework, and they deposit all that into, the $1 billion in currency into their local banks, and all those green pieces of paper go into a vault. Now, if the banks practice 100% reserves on checking accounts, then the community would just think, yep, we've got $1 billion now in our checking account. And, people go, they put their debit card into an ATM, it tells them their balance. If you added up all those balances, it would equal $1 billion. So that's not inflationary. The banks have not created money. It's just the public has changed the form in which they're holding the stock of money, okay? That doesn't cause a business cycle. That doesn't change interest rates. But now, if the banks are legally allowed to go out and lend out $900 million to home buyers in the form of mortgages, then what ends up happening, even at, the cash, they take it out, let's say, and they go pay cash for a house, or, it changes hands under the hood electronically. The cash can all still end up back in the vaults, right? That's not the issue, right? It's not that the 900 million leaves and now it's in people's wallets and there's only 100. There could still be the full billion sitting in the vaults, but now when the dust settles, if it turns out that everybody in the community looking at their checking account balance thinks they have $10 billion, which would be a 10% reserve ratio, which was what could happen with that process, multiplied over time. Now there's a legitimate sense in which the banks created $9 billion of new money, right? Because from everybody individual's point of view, the checking account balance is fungible. It trades at par with the currency. Everybody treats them the same. If you go to a grocery store and try to buy $100 worth of stuff, you can pay them with a Benjamin Franklin, or you can swipe your debit card and your account with Citibank goes down 100 and the bank's account with Chase goes up 100, right? And the bank's not going to charge you more if you're paying with your bank credit, right? And so that's the sense in which Mises said institutionally, because the public treats, at least in times of, normalcy, conventional, stable economic times, they treat actual money at par with bank credit, immediately redeemable money substitutes, he would have called it. That's what gives rise to this possible issue. And so because bank lending creates money, well, how do the banks lend that new money into existence? They have to push down interest rates, right? If with 100% reserves, interest rates were at the equilibrium level, to now get people to borrow more, the banks have to lower the interest rate, and then that sets in motion the unsustainable boom, right? If the original interest rate was doing its job and communicating the right information about, saving and long-term projects and blah, 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 well, pushing down that interest rate now, it's the wrong amount. The public hasn't saved more just because they put their money in checking accounts. Okay, so that's the standard Misesian story in terms of why fractional reserve banking causes problems. It leads the public to think there's more savings than there really are. Various ways you can talk about it. Okay, so now to the present, here we are with these things called stable coins coming out of the scene. Do you think, is that adding to the money stock and so forth? And with the Stable Act, if they impose 100% reserve requirements, is that actually good from a Rothbardian perspective that, at least we're preventing more monetary inflation if we're, defining money broadly to include stable coins?
So I'll give I want to give an initial episode or case study that's interesting specifically regarding this. Back in 2023, Circle was eager. They knew that something like the Genius Act was probably coming, and they marketed themselves as the quote-unquote compliant and regulated stablecoin even before Genius Act. That is to say, they were making sure to keep their assets in cash equivalent, we call them in finance again, assets, treasuries, cash that was deposited at another bank, and probably overnight repos. So interestingly enough, has anyone heard of Silicon Valley Bank? Circle had $3 billion deposited at Silicon Valley Bank when, because of their maturities mismatch, there was a run on their bank. So Circle was, in this case, fully compliant with this idea of full reserves, but because they did not custody their own cash, there was still a run on their assets, and they lost their peg. It was down at 80 cents thereabouts. And so this is kind of a specific instance speaking to the dynamics of, why maybe here at Mises we emphasize full reserve banking is not just pie in the sky, especially with stable coins. There's a specific real world example recently in 2023 of why it is that full reserve banking has its merits. Beyond this instance, I'll say this. In terms of the categorization of the assets that are allowed or specified on the Genius Act, two of them are in Rothbard and Salerno's true money supply, that is to say the cash deposits and the overnight repurchase agreements. The other two that are not part of the true money supply are the treasuries and the money market funds. So I think that's probably, as far as how much they do expand monetary inflation, I think in a very short-term sense, we have to say yes. But I also think they're probably a large improvement compared to full-on fractional reserve banking with a 0% reserve ratio from the Fed.
Okay, yeah. It would have been more fun for you guys if we had arguments and we had a big fight, but I agree with what he said. I guess there's no awkwardness. So yeah, let me just explain why I think that, why I agree with Jason on that, just so you guys aren't getting lost here. So again, just real simply, the fundamental point is that even though in terms of the Genius Act, they're defining full 100% reserves to include, like, oh yeah, if you got it backed up with something like a T-bill that's going to mature in 2 months, I mean, that's basically the same thing as cash. So yeah, that's safe. But from an Austrian monetary and banking point of view, well, no, a bond issued by the federal government is not the same thing as money, right? You can't go to the grocery store and spend a T-bill to buy something, right? It's not the same thing. And beyond just that, I'm not just like nitpicking and arguing over definitions, but it also allows for the expansion, right? So again, imagine, back to my earlier example, there's $1 billion in green pieces of paper the community's holding, and instead of going now and depositing into banks and then getting, out the checking account balances, and then the question is how much are they lending on top of that? Instead, they've initially handed over to stablecoin issuers, and they get now 1 billion individual stablecoins each that are supposed to be pegged, 1-to-1 to the dollar. Now, if the Genius Act required that stablecoin issuer to put it in a vault, fine. Then that wouldn't increase the money supply. The public just would have said, instead of holding green pieces of paper, we want to hold stablecoins. We just swap the form of the stock of money. No inflation, interest rates wouldn't change. But now if instead the Genius Act says, no, you don't need to hold it in currency in the vault. That would be kind of wasteful. You can go earn 3%, depending on what the yield curve is, by rolling it over in T-bills. So now the federal government's running $1 billion deficit that month, and the stablecoin issuer lends the $1 billion to the government, who then gives them bonds, and the government goes in deficit, spends that money. Mm-hmm. So now the community is still holding the $1 billion in cash in their cash balances, and on top of that, they're holding $1 billion worth of stablecoins that are backed up 100%. Because, oh, look, there's there's $1 billion worth of government bonds sitting on the balance sheet of the stablecoin issuers. So they're backed up. There can't be a run, right? So that you can see the issue there. So no, now the money supply has doubled in that example I just walked through. So Jason's right. What would be even crazier is if they said you can invest in anything you want, and then because that would give them, so they could earn a higher yield, so more people would rush into that sector, and so there would probably be more firms offering more stable coins and then giving more inducements to their clients, and so the practice would be more extensive if there were more incentives to do it. But the point being, this is not 100% reserves the way like a Rothbardian would define it, and you can see how money creation is possible there, and also you see how the federal government in that example I just went through was able to borrow $1 billion, and the public didn't have to save it. From the public's point of view, they just exchanged it for stable coins, and from the issuer's point of view, they just, that was money they kind of got for free. They just exchanged it, and then they just went and transferred it, and now they're earning the yield on treasuries, right? So anyway, you get the idea there. And they're not even really out, because they're thinking, no, we're just complying. These treasuries are basically as good as cash, so it's not even like the stablecoin issuers, you could say, are quote, saving it in that sense. Okay, so that's sort of the idea. We got like 2 minutes left here. Mm-hmm. CBDCs, what do you think? Like, how does this interact with that? Is this paving the way towards it? Is it a CBDC? What do you think?
So they, at the same time they passed the Genius Act, they also passed I believe it's called the Fed Anti-CBDC Act. That is to say, putting into law that the Fed cannot issue a CBDC. Okay, on its face, we would probably like this. I would say, of course, we're going to think with caution, right? In the sense that now all of the stable coins are under the purview of government regulators, the Fed, the OCC, et cetera. Also, you're going to have large banks presumably launching their own stablecoin products who, at the Mises is keen to highlight, are more or less crony with the government, yes? So that is to say, it's very feasible to think that, the government is gonna more or less say, yeah, we're not issuing a CBDC. Hey, JP Morgan, make sure that you signal out these accounts and, possibly freeze them, et cetera. And this is in the details of the Genius Act as well, in that the stablecoin issuers are subject to penalty and to fines, et cetera, if they don't comply with their regulators, And so we got to be sort of on the lookout for this, but explicitly stablecoins are not necessarily CBDCs. However, we shouldn't just throw our hands up and say, the government's definitely not trying to take over our privacy via the money it issues.
Okay, great. Yeah, my quick comment on here, and then we'll wrap up, is Right, I agree with Jason. In terms of the standard definitions, conceptually, stable coins are not the same thing as CBDC. And then also, even in practice, the Genius Act, what it's doing is not creating CBDCs, that these stable coins that are regulated in this fashion, they're still privately issued, and it's not that now they're one step removed. I would almost argue it the opposite way. My concern with this is, again, because they're putting such a tight leash, if you will, on the privately issued stable coins, kind of keeping them penned up. To me, that leaves open the door that they're making they're putting a ceiling on the attractiveness of these products, right? They're saying you can't pay interest on them, among other things. So to me, that opens up the door that as this proliferates and more people get used to holding USD denominated stable coins, as digital blockchain-based finance, becomes more mainstream, down the road, the Fed or some element of the Treasury or whatever could say, oh, you like stable coins? Well, those don't pay any interest. Wouldn't it be better if you had a thing that was just like that, but we pay you 6% interest? Well, that's what FedCoin is. Here you go. It's the same thing, and we can print more of these if we wanted to, whereas these private stablecoin issuers, they can't. So clearly, you want to have some of that, right? So that's my concern. I'm not saying that's what's going on here, but I am just saying in terms of the interaction with CBDC, to me, it's more like it still leaves open that door down the road, and I could see a natural progression because in other words, they're prohibiting the private sector analogs that would compete directly for what a CBDC claims to offer if you're just willing to give up your privacy and, I'm sure they wouldn't turn off my money, right? So there you go. Okay, well, thanks, Jason, for your time here and your work that you're doing. Thanks, everybody, for
Indeed.
attending.
Thanks for having me. Thank you
enjoy the
all.
rest of Mises U.
students on these two front rows, please. Come on. There we go. Thanks, Adam. Appreciate the moral support here. All right, thank y'all. Okay. All right, hello. All right, hello, friends. Okay, please start taking your seats. We're about to start. One quick announcement for you, just kind of a friendly reminder. Please go ahead and fill out the Mises U survey. You're going to be entered into our raffle and potentially win a silver coin if you fill out the survey and you win. The link is going to be mises.org/MU25survey. And if y'all go ahead and complete it, that would be so helpful so that we have great feedback for next year. So yeah, thank y'all.
All right, hello, everybody. So for those who don't know me, I'm Connor O'Keefe. I'm on staff here at the Mises Institute. The title of my talk is the Rothbardian Insights on the Political Economy of Mass Media. The unofficial title could be Why the Media is Bad, basically. And so like I said, I'm on staff here, and in addition to running around and doing AV, like I've been doing all week, I write a weekly article, I produce video content here, and I'm a co-host on one of our podcasts. And all of that revolves around current events. So over the last few years, I've been reading a lot of news. And over that period, I've become fascinated by the news media itself and by media criticism. I think, people are always complaining about the news, and for good reason, which we'll get to. But when I talk about media criticism or media critics, I'm talking about the scholars, journalists, and pundits who focus on what the media gets wrong and why it gets it wrong. I've also come to believe that most people, including a lot of us in our sort of world here, I think that we severely underappreciate just how important the media is. To put it in more Misesian terms, we're all actors, of course. We act using means to achieve certain ends. And what we decide to do as actors is built on our understanding of reality, our internal model of reality. And our internal model of reality is indistinguishable from reality itself, at least to us. And everything we understand about the world that does not come from our personal experience or the experience of those close to us that's relayed directly to us, everything else that we understand about how the world works comes to us through media. For things like history, we mostly rely on books or other media products that themselves rely on books. But for current events, for our entire understanding of what's happening in the world outside of our personal experience and word of mouth, it all comes from the news media. And I'd say even in the internet age, when we talk about how young people are getting almost all their news from social media, that's usually referring to some online personality that's reacting to a story that was broken by like the Wall Street Journal or Reuters or something like that. And again, because our internal model of reality is indistinguishable from reality itself to us, if that news coverage is framed in a misleading way or is outright false, we can easily develop a completely delusional worldview without even noticing. So yeah, the news media is important. And so understanding how it works is important too. Unfortunately, most people that are dominating that conversation are, let's just say, lacking when it comes to their understanding of economics or the nature of government. I think Austrian economists and libertarians need to have a bigger presence in this discussion, in this debate. That's one of the reasons I'm drawn to this topic. So like it says in the title, I'm looking to apply Rothbardian insights. Rothbard himself did write about the news media, but it's not a topic he focused on a lot. So when I say Rothbardian insights, I'm talking about the broader understanding of where power resides in society and how the state interacts with the market, that like the broader Rothbardian tradition is sort of advancing. So this is a huge topic. There's a lot of work and research that can be done on it, a lot more than I can cover in 30 minutes. So I'm just gonna run through a couple concepts that I think are important for understanding the American media news system. So let's dive in. The media is an industry. It's obviously part of the economy. In the US, it's mostly private companies with a few government-funded or semi-government funded outlets. However, What makes the media different from just about any other industry is that most people consider the media to have an important public role. It goes beyond public good. It's seen as a crucial public institution, a vital part of our democratic political system. You'll sometimes hear it referred to as the fourth estate and spoken about as being just as important as the three branches of government, basically. And almost any given criticism of the media that you hear is, at the end of the day, an accusation that the journalist or outlet is failing in this almost sacred role. Unlike other industries, the success or failure of the media is not judged, at least by those outside the industry, by how much money they bring in, but by how well they inform the public about the news and issues of the day. Even among right-wingers and anti-establishment folks who are not typically, as enthusiastic about our current democratic political process as most people, even among them, criticism of the media still tends to boil down to it failing to live up to this democratic ideal. And most commonly, the blame for that is placed on the incentives of business, or more precisely, on the profit and loss system. The media itself is constantly complaining about how their interests as businesses are corrupting their industry and hurting their ability to fulfill their sacred public role. Most media criticism out there breaks down in like a partisan way. You have Democrat media critics like Brian Stelter and Aaron Rothbard, they're on the left, who are essentially advancing this narrative that the entire media is generally doing great work, except for Fox News. And that Fox News is this singularly flawed entity within the media ecosystem that is greedily telling their conservative audience exactly what they want to hear, and therefore profiting off of the demise of our country. And Republican media critics, like the shows and organizations there on the right, they tend to present the exact same narrative in reverse. Fox and other right-leaning networks are doing real journalism, while the other side, the other networks, are infected by liberal bias and then are similarly profiting as they sort of whip their blue audiences up into a frenzy to the detriment of our country. Most of this media criticism I find to be pretty unsophisticated, but even among more sophisticated media critics, like these are two of my favorites, Matt Taibbi and Glenn Greenwald, even them, they both, they're more left-leaning, but they have a very good understanding of where power resides in society, and I think they speak a lot to the true bipartisan nature of the permanent power structure in Washington. They're definitely not in that partisan blame game like some of those folks on the last slide. But even they tend to come back to the media being worse or becoming worse because it's more profitable. So let's get into that argument. And to do so, I don't want to straw man. I don't want to present a fairly weak or lazy form of that argument. There are plenty of them out there. I want to use the strongest version of the argument, and I believe that comes from Matt Taibbi in his book, Hate, Inc., which I highly recommend. By the way, it's a very good book. Taibbi is certainly not naively romantic about how the news used to be, but to help explain what he sees as the problem that we have now, he first goes back and looks at the media and how it worked before. And to do that, he points to broadcast media in the second half of the 20th century, back in the days of Walter Cronkite. He, again, admits that this era tends to be romanticized too much, but it is true that media organizations at the time were very different from what we have today. And the reason for that, he argues, is because they were trying to reach everyone at once. He says the news used to try to be extremely uninsulting to avoid alienating anyone. In the book, he sort of paints this picture of a family with a multitude of political beliefs, from a crazy right-wing uncle to a young socialist cousin. And he says the broadcaster's goal was for this entire politically diverse family to be able to watch the same news program. And in a business where more viewers equals more advertiser demand, which equals more revenue, that's a very understandable strategy. But all that began to change in the 1990s with Fox News. So in 1996, Rupert Murdoch and Roger Ailes, they decided to adopt a new strategy for their new cable news network. Instead of trying to reach everyone, Fox would target a subset of the population, obviously older conservative Americans. Pretty quickly, it became clear that even though this was a smaller group, tailoring news coverage to the interests, biases, and fears of that smaller group got them addicted to the news to a degree that hadn't really been seen before. It was a very successful strategy and therefore a major market signal. Eventually, the same approach was adopted by the other political news networks on cable, really by necessity, leading to the very politically skewed setup we have today. Interestingly, CNN made a serious attempt back in 2023 to transition away from that and to go back to a model where their coverage would be able to reach everyone, and it went terribly for them. They were hemorrhaging money and viewers, so the higher-ups fired the guy in charge of the change, and they've mostly abandoned that project, which really backs up the argument that a major reason the networks are acting this way is because otherwise is bad for business. Taibbi argues that the same approach has spread to almost every corner of the news media, including outlets that used to be held in high regard by everyday people, not necessarily those of us at the Mises Institute. And he says this really accelerated during the Trump years. It's also true with a lot of what we may call the new media online. Not all of it, but many of the shows, networks, blogs, and outlets that do well online appeal mainly to a specific party or ideology. So these media critics like Taibbi, they argue that these media businesses are financially incentivized to tell their audiences what they want to hear, even when it's misleading or untrue. So, after the last week, I really hope that all of you are very skeptical whenever you hear somebody blame the profit and loss system for an industry being terrible. You should be. And indeed, I do think there's a major problem with the argument I just laid out. But the problem is not that it's inaccurate. I think that it is dangerously incomplete, and to see why, we need to ask an important follow-up question. So again, media outlets are incentivized to provide their audiences with the news they want to consume, even when that news is biased, misleading, or outright false. The question is, why is that a problem? Or, said differently, why specifically is that a problem? Media critics tend to stop after demonstrating that something in the media, or something the media presented as true, is actually misleading or false. But if that alone were the problem, we'd also be hearing a lot about the danger of things like reality television or professional wrestling, for example. Both contain moments that either through deceptive editing or sometimes just outright staging are completely fake but are presented to the audience as being true. And yet people aren't building careers exclusively detailing the falsehoods of these television products, or at least not many people. Now, obviously this is not what we're talking about. We're talking about programs that are meant to inform people about current events, not these pure entertainment products. But then what about sports media or these gossip magazines? These media products share a lot of characteristics with what we were talking about earlier. The world of sports media is full of bias, especially local sports media. And tabloids like this are notorious for putting together very misleading narratives based on the flimsiest rumors and gossip. And I'm not going to pretend that nobody has a problem with these products, but it's not like 92.9 The Game in Atlanta or People magazine are driving the same kind of panic about misinformation and fake news that Fox News or the New York Times are. Why? This is where I think having a Rothbardian worldview is clarifying. The answer is that biased, misleading, and outright false news is only ever translated into widespread real-world harm through the political system. And in this case, I'm talking about democracy. It's true with any kind of state, as Rothbard mentioned over and over again, every state is affected by public opinion, but this is institutionalized and accelerated by the democratic process. Democracy gives people an avenue to take their false or even delusional worldviews and force them on other people at gunpoint, as everything is done through a state. But that's not all. The democratic system also feeds into the problems with the media too. Because we have effectively zero chance whatsoever of swaying an election alone, and because the political system is so socialized, meaning the costs of policies are so spread around, we face no immediate direct consequences for being wrong in our role as a voter. So we have no reason not to consume whatever news we find to be the most entertaining or the most comforting and confirming of our worldviews. So to put that in writing, by providing the public with a means to force their worldviews on others while protecting them from the consequences of being wrong, the democratic political system drives the prevalence of inaccurate news and gives it an outlet to cause widespread harm. That outlet doesn't exist for professional wrestling. It doesn't exist for reality TV, sports media, or celebrity tabloids, but it does exist for any news relating to the actions of the state. Which is why inaccuracies with that kind of media is considered such a pressing problem. Said another way, the media isn't damaging because of the profit and loss system. It's damaging because of the political system. One second here. But it isn't like all the problems with the media are due to passive institutional pressures. The government itself does a lot to try to control and warp the media to its own benefit. After all, it needs to. As Rothbard goes over in the third section of his essay, Anatomy of the State, the long-run problem for any state that wishes to preserve itself is ideological. It's all about ideas. It's about what the population thinks about the legitimacy and benefits of government actions. And like I said at the beginning, because the news media is so important for how we understand how the world works, for how we build our internal model of reality, the government needs to exert some level of control over it, not only for its benefit, but for its very existence. And throughout history, one of the most common ways the ruling classes have sought to control the media has been through heavy-handed censorship. That's been happening since the printing press created what we think of today as the mass media, and the US government is no different. The peak of the US government using that approach, I believe, happened under Woodrow Wilson, especially when his administration cracked down on anti-war dissent in the lead up to and during America's involvement in World War I. People were thrown in prison for speaking out and writing against the war, and that included journalists. And even today, the Espionage Act, which was passed under Wilson, is still held over the heads of any journalist that's looking into, often a national security-related story that the government would rather the public not know. However, I think with the exception of the social media censorship we saw after Trump got elected, and then especially during the COVID years, I think that this heavy-handed approach in the US has been secondary to another much more effective strategy, which is the weaponization of media access. That approach actually predates Wilson. Teddy Roosevelt was sort of the pioneer of it. There's an urban legend that one night in 1900, Roosevelt noticed some reporters huddled outside the White House in the rain, looking for sources, and he invited them in, thus forming the White House press pool. The story probably didn't happen, but the imagery of a president inviting struggling journalists in from a cold, rainy night and giving them access to the White House is perfect symbolism, I believe, for how the American government handles the press. It appears benevolent and on the surface as if it's embodying some democratic principle of transparency. But by bringing certain journalists in, excluding others, and retaining the power to revoke access, the government gained leverage and control over much of the press. But it really wasn't until the decades after the World Wars, when our political class was trying to demonize the Soviets, in large part for their crackdown on the press, that our government seems to have recognized the effectiveness of Roosevelt's approach. As I put it in an article once, the US government came to recognize that the key to good media censorship does not lie in muzzling the watchdogs, but in transforming them into lapdogs. Fast forward to today, this is the main way the US government controls the media. The press pool that Roosevelt unofficially formed is now an official thing. It's organized by an independent organization called the White House Correspondents Association. For people outside the media, they're most famous for hosting the White House Correspondents' Dinner every year, but their main function is as the group that decides which outlets get access to the White House press briefings, who gets to accompany the president on trips, and then within that, which journalists get to travel with the president on Air Force One. However, the independence of this process is a complete illusion because the White House decides which outlets are eligible for the WHCA to pick in the first place. The government is controlling the whole process. Trump has actually changed this in his second term. His administration now chooses who gets access to briefings directly, which they bypass the WHCA, and the media is trying to spin that as an assault on press independence. But the White House was already in effect controlling or picking who got in, or at least deciding on the options. Anyway, this level of access granting may have begun with the White House, but it's now spread to basically every part of the federal government, the most effective of which might be the Pentagon. Back during the Vietnam War, the government got very upset with all the Western journalists roaming around the country, reporting on the war and shining light on aspects of it that the government didn't want the public to know about. So when the Gulf War started in 1991, the Pentagon tried something new. They did the media the favor of granting them access to an official government-sanctioned media center near the Iraqi border, where they were fed information that officials wanted the public to know. Then occasionally, some of those journalists would get to go join American troops and tour specific areas on and around the front lines. Peter Van Buren, who's a writer now, he used to work for the State Department, and when he did, he embedded with combat troops on a number of occasions. He's written about this in a number of articles. I included a QR code to one of them. He talks about that basically to the government's delight, it quickly became clear that putting heavy restrictions on what embedded journalists could ask or report on was unnecessary, in large part because the thrill of getting to ride around in armored vehicles with a bunch of heavily armed guys who were both interested by and working to protect the reporters as if they were VIPs was seductive, as he calls it. These embedded reporters and their crews began pumping out what was effectively pro-war propaganda that went far beyond anything the Pentagon comms teams could have gotten away with. And presidents, too, have used embedded journalists for similar reasons. George W. Bush, for example, made sure a reporter was with him to document his secret plane ride to Baghdad in 2003. He picked Mike Allen, who would eventually go on to help start Axios. And Allen wrote this absurdly dramatic account of the whole trip. He served his purpose well. And 20 years later, back in 2023, when Biden took his secret train ride to Ukraine, to Kiev, his team made sure a New York Times journalist, photographer, was there to document the whole thing. They also had other journalists there to write similarly dramatic chronicles of Biden's courageous ordeal. These are great examples of how the government uses access to control media narratives. These were publicity stunts. The journalists weren't tacked on to cover these trips. They were the entire point of the trips. And it could probably go without saying, but getting access to the top officials in the government or the people on the front lines of a war is an enormous advantage in our highly government-centered media ecosystem. It's essentially an indirect subsidy. And when we're talking like on the scale of decades here, this level of access from the White House and eventually almost every other part of the federal government went a long way in making the handful of media outlets that the government chose to give access to into the most prominent outlets in the industry, the group that we now usually refer to as the mainstream media or the legacy press. In the decades since the World Wars, these newspapers and networks came to dominate the industry and exert an enormous amount of control over how the American public understood the world. And because the government was so crucial for creating and maintaining their status and position as long as they were on good behavior, it meant the government had a good deal of control over how the public saw the world too. But to end on a little bit more of an optimistic note, that control is slipping. I don't think it's very controversial to say we're going through a major transformation in the media space, but I do believe the best explanation of the nature and significance of that transition comes from this book, Revolt of the Public. Another QR code up there if you're interested. Very good read. In it, the author argues that one of the most important factors that has determined where power resides in society throughout human history has been the technological setup of the information space. Specifically, he identifies 5 distinct phases or waves, as he calls them. He argues that the rise of writing and alphabets revolutionized how humans could spread information around, and because of the logistical constraints of the medium, it also centered a lot of power into the literate, priestly, and bureaucratic classes in society. So the institutions and dynasties that came to dominate in the old order, or as Rothbard calls them, the Ancien regime, not referring specifically to the pre-revolutionary French government, but kind of the monarchies, religious institutions, and bureaucratic merchant and banking dynasties that made up the ruling classes at that time. These ruling classes dominated in large part because they enjoyed a monopoly over the media environment of the day. But that monopoly was shattered with the invention of the printing press. The author of that book, he argues that it's no accident that some of the biggest political changes in history happened shortly after printing became more widely available. Things like the liberal revolutions, the Reformation, all that stuff, about a 500-year transition. But what he argues is that it's not so much that there was a sudden change in the public's sentiments, but that these changes happened because abrupt changes in the information space allowed sentiments that were already there to spread and develop outside of the ruling class's control. Like I said, it took a long time, about 500 years. I think the World Wars was sort of the true end of that, especially World War I. And the process was not smooth at all. It was pretty rough. But eventually that global old order was replaced by the current global elite, which came to power in large part because they gained a lot of control over the new information technologies, the printing press, and eventually the airwaves. However, the book argues, and I think it's hard to deny, that the internet has fractured the current global elite's monopoly over the information space, and it has done so to a degree that goes way beyond what happened with the adoption of the printing press. and a lot of the craziness we've seen in politics in recent years is because we are in the early stages of a similar widespread transition from one ruling class to another. That's his argument. Of course, the government here and governments across the globe are attempting to gain control over the internet to preserve their monopoly over the information space. But I don't think in the long run they'll succeed. I think they will kick and scream and fight hard, and they can cause a lot of damage, don't get me wrong, and they'll find new ways of threatening our freedoms. But I think the nature of the internet means that they will never enjoy anything close to the level of control they had over the media and over the public's understanding of the world that they did just a few decades ago. If that's true, then significant changes are coming. I mean, in many ways, they're already happening, which I believe, just to wrap up here, I believe really speaks to the importance of programs like this, like Mises University and what the Mises Institute is doing. We've always been in a battle of ideas, but there may never have been another time in history when that battle had the potential to be more fruitful. Thank you. We're just going to go right into Tho's talk because we got no break. Let me pull up his slides. Oh. I'm going to move right back to my job.
Okay. Okay. Well, I've got one announcement real quick. We have our finalists that will be going on to the next round of the oral exam. Gabrielle, Ludovico, Adam, Kyle, Ryan Turnipseed, and Jonathan Yin. So if you will start at 1:30 to 2:20, ask for Felicia for finer details there, but since you guys are not going to be downstairs to see that, then we want to let you guys know. So how's this week going for you guys? Exciting? Well, hopefully we will keep that trend going. And I've talked to a lot of you already this week. My name is Tho Bishop. I do want to provide this talk a little bit of context. One, I am, I think, the least qualified faculty member, if you consider this talk a faculty talk this week. I have no master's degree. So what I'm trying to do is build off the economic concepts that you have learned this week. Now, some of the stuff I do is more on the social media side, the popular side. We have a number of apprentices this year. We have Ryan over here. We've got Bray Sadler. We've got Marissa Bell. And so we've been creating and thinking about digital content, particularly targeting younger generations. And we've talked a lot about the importance of narratives. I mean, really, your view on modern economics largely kind of has historically come from your narrative, your understanding of the Great Depression, for example, right? So the way that we understand the narratives of particular elements of history, are very important for ideological movements. And so that is kind of what I'm going to shape this talk on. Now, our topic is Zoomers, America's most persecuted minority. And obviously I knew my audience here. So I have my representation of Zoomers. Of course, this is a little bit broad. We do have to cancel out some folks that would not fall into this category of Zoomer, which would include myself. Now, the name of the talk is America's Most Persecuted Minority. That stems from, for those that know the Rothbard lore, I am doing an homage to America's Most Persecuted Minority, which is focusing on tobacco smokers from Rothbard. So that is where the America description focuses on. We're going to talk mainly on looking at some of the specific stats to Generation Z for America, but obviously this is an international problem. Dr. Israel's talk looked in particular about France and Germany and those sort of things. So I know we've got a great international crowd. So obviously this narrative is something that has global appeal. The reason I do mention where I get the inspiration for the title is that anytime I can pitch the irrepressible Rothbard that features this essay, I will do so. It's one of my favorite books down in the bookstore. Okay, so if we are talking about Generation Z, what are the challenges here? Let's look back at what people are saying about this topic. We've got, millennials had it bad. Generation Z may have it worse. So again, there's a lot of focus on sort of these economic issues plaguing your generation. But this is not necessarily particularly unique to Generation Z. We have, we were talking about millennials having it worse off than their parents, my generation, right? Yeah, you go, further back there, even Generation X was being viewed as having it worse off than those that came before. And what everyone can agree on is that boomers have had a pretty good run of the gambit here. So why is this? Why is this? So we'll start looking at, what are the aspects that lead to what appears to be each coming generation facing challenges that did not come before. And obviously, here at Mises University, we're going to focus a lot on the role that the government plays on that. And so we'll look first, before getting onto the monetary side of things, let's look at fiscal policy and political policy. So this woman in the middle here is a woman named Ethel Percy Andrus. She was the creator of AARP, which is a retiree activist group. She herself did not have children, which might be a signal of something. And AARP, created as an interest group in 1958, has been extremely successful at being a lobbying arm for retirees. Now, in the defense of Ms. Andrus, we should care about our grandparents. We should care about the elderly. A good civilization takes care of those that came before them. And a lot of the early efforts of AARP was focused on helping insurance prospects, particularly health insurance prospects for retirees, all of which, very, very charitable goal there. But AARP as a lobbying force, as a political force, has resulted in a significant increase in the amount of spending on programs that serve primarily older generations. Here is some projections for the budget going up to 2030. You'll see that Medicare and Social Security will make up about 50% of the budget by 2030. Here is a breakdown of Medicare spending in particular. You'll notice that pink kind of starts a little bit later in the process. That's during the George W. Bush administration, where we keep adding on new entitlements that, again, are designed to benefit retired generation Americans. So here is George W. Bush keeping our promise to our seniors. Notice Chuck Grassley, who is right there, and he's got the red vest. He's still in office, so that's fun, 20 years later. So again, there has been a very successful lobbying effort that redistributes wealth to elderly generations. And a big part of this, obviously, right, is that if you look at political behavior, right, the most dependable voters tend to be older voters. Younger voters are far less reliable, particularly when it looks at midterms and things like that, right? So you have, historically, older generations are a political constituency that you want to take care of, and therefore you're going to keep our promise to seniors by writing checks that benefit previous generations that are going to be paid for by future generations, right? I don't think any surprising sort of analysis in terms of how we understand the way the state operates, but obviously there has very real generational consequences to it. So let's look at the other side of the table. Here is just a kind of a charting of inflation over quite a period of time. We've seen a number of different charts this week measuring various monetary measures, things like that. I think everyone here understands that particularly since 1971, we've dealt with a major inflationary environment. If you're looking at when the median age of the baby boomers, that target date, it would be 1980. And so that's just kind of measuring inflation to today of just from kind of the 25-year-old boomer to today. Again, almost 300% inflation rate. And so, again, as we saw in our earlier lecture by Dr. Israel, is that the consequences of these inflationary policies that we get from central banks is not simply that the price of goods goes up, but it disproportionately benefits those that hold assets and investments as opposed to those who are earning wages, right? Your labor is one thing you cannot truly save as an entity itself. You can save the wages you get from your labor, but you've got a very finite shelf life that comes into your ability to do harder labor, to do these sort of things. And so any sort of inflationary environment is always going to benefit those that have come before at the expense of those currently toiling at the present day. And so this has had predictable results when we see the financial, where wealth is held in America today. So you look at the one over there. Again, baby boomers represent the red portion there, which makes up a significant dynamic of the net wealth held in America. The other one, we got just have a different representation of the same chart. Again, baby boomers making up about half the percentage of wealth held today. So again, this is the products of the financial system that we find ourselves in. And so I want to talk a little bit about the mastermind behind this financial system. If anyone has seen Murray Rothbard's talk on Keynes, Keynes the Man, it's a very fun book. We've got a written version of it down there. Rothbard talks about Keynes that, look, I'm gonna attack the man. Some people will accuse this as being an ad hominem fallacy, but I believe in both destroying the ideas and the man. Well, I'm going to use the division of labor. We've had a lot of critiques about Keynes today, so I am going to target the man himself in ways that I think are genuinely relevant. So John Maynard Keynes, if you look in his archives, you'll find letters to friends where he talks about particular hotspots in Tunis and other parts of the developing world where the services of both bed and boy are cheap. And while some people have tried to write this off, we have a great independent scholar in our orbit, Ed Fuller, who has spent a lot of time in Keynes's personal archives. Keynes took very detailed notes of his activities, and sometimes they claim with photographs. And so we know from his archives the sort of bed and boys that he was purchasing, right? So, John Maynard Keynes was a pedophile. Now, I think this is particularly relevant because what Keynesian economics does is, like the man, it screws over the next generation. But I think the character and quality of men really does have some important reflection on the people. Karl Marx was someone famously riddled with boils, right? And his philosophy on the world caused a tremendous amount of pain. Marquis de Sade was a pedophile himself, and his works were meant to destroy the innocent in the most horrible ways possible. On the other side, we have Ludwig von Mises, a man of great courage and integrity who stared down bullets because he refused to lie to the government in war service. And here we got John Maynard Keynes, whose entire economic philosophy is about living for today, in the long run, rule all dead. I think those ideas, taken seriously as they are in today's society, are going to have very detrimental effects for the future. What is interesting, though, is that this is now becoming more normed. So this is actually from, I believe it was The Independent. Someone talking about a recent biography spun this in a way that there was an upside to Keynes's commercial activity because it required him to meet people from less privileged backgrounds and less clever than he. So that made him more liberal and tolerant. So that was the upside of his activities elsewhere. So, we have described how aspects of the way the government operates, both in fiscal and monetary practice, and the ideas that have inspired them have influenced, have intergenerational effects. But if I'm going to prove my title correctly, I must identify there's something about Zoomers, Generation Z, that puts them in a worse situation than those that came before. And a big aspect of this is that, and obviously our lectures here, we have highlighted a great deal, but I think a lot of people, the extent to which 2008 was a radical change in the way that a lot of these policies are done, I think is something that can be understated. right? Even our own focus, right? We can talk about Nixon going off the gold standard in 1971. We can talk about the origins of the Fed in 1913. But the way that central banks have operated since 2008 are themselves a complete radical change from all the previous bad policies of the Fed itself, and therefore this has significantly escalated all sorts of aspects. When you have years and years and years of low interest rate policies, which again does not simply affect inflation rates in terms of consumer products, but has all sorts of distortions within the economy. If we are concerned, for example, about manufacturing capacity in the United States, there's going to be aspects to which having low inflation rates or having very low interest rate policies, which therefore forces investors into riskier assets, are going to have massive changes in the way that capital investment, very structural dynamics of the broader economy. It's going to lead to corporate consolidation. And all sorts of changing factors. And so there is something, there's a whole lecture that can be given on the precise issue of financialization, but we're gonna focus on a few other things. But if you're interested in this topic, I've got two recommendations for you. One is this article by Ryan McMaken that you can find on the Mises Wire. It's also in, there's a book I edited called Anatomy of the Crisis, which was kind of highlighting some modern Austrian work and its relevance and modern financial concerns that were going on. It was published during COVID, so it has that sort of tie-in, but it's really not about COVID itself, but just some of the buildup and the consequences of financialization. Another book that I find really very interesting, it came out last year. It's by Rashir Sharma. It's called What Went Wrong with Capitalism. Particularly if you're in a non-Austrian program and you're looking for some resources that might help translate to non-Austrian economists, Sharma he's not necessarily within our orbit. He's an investment guy. He's got a very mainstream, respectable background. His book heavily references Fed sources, mainstream sources, things like that. About as radical as he gets, he says some very nice things about Hayek and his contributions, right? But his entire book is focusing on, again, the damage done by government debt, deficits, and the low interest rate policies of the Federal Reserve. There are some policy suggestions that he makes in terms of navigating the damage done by post-2008 policies. Some of which includes like antitrust actions and things like that, things that we might not necessarily be on board with, but there's a lot of really good information that can be easily translated to a mainstream perspective from that book. So, we're living in a world of financialization. What are some of the ways that this is demonstrating its consequence, its fallout for Generation Z? Well, Generation Z is making less money than millennials did, my generation did 10 years ago. Extremely stressed out about their situation. Doing a direct comparison of median wages. When you take into account inflation, again, all the stats bear out this aspect that Gen Z is doing worse. Again, even with inflation, or if you account inflation and its consequences within their measures. Here is Generation Z is also is seeing significant growth in government subsidies and welfare programs, welfare recipients, right? So they are the blue line there. So again, this is compared to other generations, they're a lot more likely to receive government aid. And the interesting aspect on the other side is that this system is not necessarily working. It's not like every single baby boomer is doing well off either. Baby boomers, many of them are concerned about their own retirement. So that goes to the larger systemic issues that are at play. And this matters because there is kind of a perception that, Gen Z is going to be fine in the long run because there's going to be massive inheritance gains made by that generation. But if you've got baby boomers that are concerned about their own current financial standing, if there's changes in investment and inheritance behaviors, then that's going to undermine some of those kind of far more optimistic cases for the economic prospects of that cohort. So, also in the news is, again, the direct impact that inflation has had on younger generations. We've talked about that a little bit already, but I'm sure One particular measure of this, which I'm sure many of you have talked about, is home ownership rates in general are significantly declining. Now we've our response to the housing bubble in 2008 was to double down on a housing bubble. A variety of things. I know I bought my home in Florida in 2019. It is now twice the value that it had, which looks good for my balance sheet, bad for my property taxes, but also not something that if I'm trying to get other people to move into my community of my generation, not good for that. So this is obviously a very major problem here. And as Dr. Woods highlighted in our introductory level, right, like if you do not have a meaningful, optimistic path that you can see for ownership, particularly property ownership, you're going to put off family formation, you're going to put off having kids, you're going to have a very far worse off society. And again, our economic incentives, our economic situation is creating those conditions for Generation Z. Now, there is another troubling trend out there, which is that even though Generation Z is being hit with lower average wages, is being hit with all sorts of difficulty in job prospects, it's not stopping their consumer behavior. We're seeing Gen Z being far more interested in credit products and less interested in saving than prior generations. So again, it's not going to be all how you guys are victims of state policy. There's going to be a little bit of you need to get your own houses in order sort of aspect to this talk. And of course, this is being facilitated in a major way by buy now, pay later apps, which are big demand for Generation Z and being used for things like entertainment, restaurants, and things like that. Obviously, this is not your traditional form of rent, paying monthly for maybe an appliance purchase and something like that. So Gen Z is becoming increasingly reliant upon debt more than millennials did. And more than past generations. Again, this is a very troubling dynamic here. I see I got a redundant slide, so we're gonna move on from that. So again, going back to the inheritance aspect, right? Because that's one of the interesting things. There's a number of reports out by banks that, again, are very optimistic about their role in the financial future of Generation Z, because again, they like people that take out debt. So it's a great demographic there, and their big expectation is that you're going to see a massive wealth transfer from parents to children within that generation. And obviously there'll be plenty of that happens, as we usually see, but we have a very interesting generational perspective in terms of the concept itself of inheritance. Baby boomers, this is a poll by Charles Schwab. Baby boomers polled at the lowest rate of being focused on having something that their children can inherit from their financial wealth. Now, it might be, you could argue that it's a little bit easier for a millennial to make this, to say that they really care about future inheritance, rather than a boomer that's a little bit closer to that time frame of things. But again, we're seeing a very massive change here in the way that where I'm from, we've got a massive active retirement center that is Jimmy Buffett themed, Margaritaville. You see a lot of these sort of focuses on these active retirement areas, and again, what appears to be a broad sort of cultural change in the way that the preference for consuming the wealth that they have made throughout their life rather than passing it on to future generations. Now, the result of all of this should not be particularly surprising. We see growing cynicism of free markets, of capitalism, a rising anti-capitalist mentality, to use a phrase from Mises. This is a headline which was just very useful as an illustrating tool. The information down below, though, comes from a survey by the Wake Forest research. They have a research center dedicated to capitalism. They see that less than half of Gen Z views the profit system itself as something that rewards hard work and success. 64% of Gen Z thinks entrepreneurs are successful because of their contacts, not because of the way they can better serve the market. You see just growing cynicism of the concept of meritocracy, right? That the worst rise to the top. And there's perhaps most troubling, less than half of Gen Z views a person who is not willing to work hard as a problem here. So again, it's the economic environment that they have found themselves in, dictated by policy, dictated by bad economic ideas, is corrupting a large percentage of younger generations' view of really foundational pillars to civilization and social well-being right here. This is very, very concerning. Now, there are some silver linings. There are some positives that I do want to highlight as a backlash to some of these economic issues. One is that Gen Z is very big into crypto. Various surveys show that Gen Z is over half surveyed have owned crypto at some point. And we also see a significant decay in the trust of political institutions. So this is true almost across the board. Now, one thing that's really concerning here is that the top thing, I don't know if you can see it, but the institution that polled the best was the institution of science. And I would think that a generation that was particularly affected by the damage done by COVID tyranny would be a little bit more skeptical of the science than other things. But outside of that, we see significant distrust in the news for reasons that Mr. O'Keefe mentioned earlier. We see it in police, we see it in the criminal justice system, we see it in the Supreme Court, we see it in Congress, we see it in the presidency, we see it across the board, that there is growing a far greater cynicism and skepticism of these political institutions that have long been taken for granted. And so again, this, in theory, is an opportunity for very real positive political radical change. And so that is what I'm going to lead into for the rest of the talk. Now, first and foremost is that I've identified a lot of the policy consequences that are unique to Generation Z, but I don't want to dare suggest that your generation is by far has it the worst than anyone else in history, right? You don't have massive world wars such as the type that this gentleman fought in, right? Again, bad economic policy, you're bearing the brunt of it, but things could be worse, right? Things could be worse. And so, if Ludwig von Mises could find himself to be inspired to do extraordinary things, then there's no reason why your generation can't be as well. And it's in all of our interest to try to make sure that your generation and those that come after it recognize that we need merit. We need price signals. We need private property. We need all the concepts that we've learned this week, because these themselves are the key for growing civilization, and it's the rejection of the sort of knowledge that we've gotten here this week that has led to the economic problems that they are facing. And so we've got one of my favorite Mises quotes: "No one can find a safe way out for himself if society is sweeping towards destruction. Therefore, everyone in his own interest must thrust himself vigorously into the intellectual battle. None can stand aside with unconcern. The interests of everyone hang on the result. Whether he chooses or not, every man is drawn into the great historical struggle, the decisive battle into which our epoch has plunged us." And so, my action item to all of you is that, having been here at Mises U, is find your own ways of getting this narrative that, yes, you are, there are aspects that suck about being in Generation Z, that the economy is rigged against you, that a lot of the critiques that you might hear from leftists in terms of, again, ways the system is rigged against, all the nice things in the world, those things are true. But what matters is that we've got a different narrative, we've got a different answer for what is causing these things, right? It's the rejection of sound economics. It is not the consequence of free market capitalism itself. And so, with someone else who I think when it comes to strategy of ideological movements is just, there's always something new to discover. We're gonna go back to the man that inspired the title of the talk, Murray Rothbard. There's a great long article for those of you that are interested in Rothbardian strategy as a subdiscipline of his work. It's called A Strategy for Libertarian Social Change. It's unpublished. David Hart, the economist, the great Bastiat scholar, he's got it on his website as an HTML format. There's a PDF format out there. I'm working on formatting it for our site right now. But there's a lot of great stuff in terms of just what leads to successful radical political movements throughout history. And one of the aspects that you hear in the discourse from James Lindsay and the right? That's this concept of like a woke right? And it seems to me that, I mean, depending on, sometimes there's kind of singular concerns, sometimes foreign policy related, which are kind of used to peg, who's woke and who's, okay, right? But I think the closest to like a sincere criticism or sincere definition that is provided by some of these folks is they criticize using sort of class analysis from a right-wing point of view. But of course, this is something, classical liberal class analysis is something that predates Marxism. And so there's something we can learn from that. And so within this strategy memo, Rothbard talks about the lessons that we can use from the growth of the success of Marxist ideological projects. And I think there's some relevance here in terms of how we should consider these generational grievances going forward. So from Rothbard, the fundamental aim of Marxian propaganda and agitation is to explain to the masses their own interest, or in the Marxian terms, to transform or raise the false consciousness of the exploited and oppressed classes into a correct consciousness of their plight. In short, the Marxists, as do libertarians, identify certain majority classes of society who are being oppressed by other minority classes. Thus, they implicitly adopt the Humean view of the state that its continued rule rests on majority support. There are, of course, differences in accordance with their different theories. Marxists wish to desanctify and eliminate the existing feudal order or capitalist state and replace it by the dictatorship of the proletariat. Libertarians wish to desanctify and eliminate the state itself. This difference stems from different views on who is being exploited and who is doing the exploiting. Both groups have a theory about who the good guys and who the bad guys are, and both groups wish to explain to the deluded good guys the nature of the bad guys and of the continuing oppression of the former group. The difference is contrasting perceptions about who the good guys and the bad guys happen to be. So again, to me, this is the core of why this narrative is so important, is that we must identify that the bad guys that are screwing over your generation, it's the central banks, it's the government, it's those that are advocating for those ideas. It is the Keynesians that still walk among us. And on contrast, the good guys are the ones that identify these as problems. And it also requires us to think about these sort of lines, right? That we need to elevate and escalate and focus on recognizing that Gen Z is a generation that are victims from the state and should be elevated. We should take your concerns, your considerations seriously. And I think there's a lot of opportunity here in trying to create a more Rothbardian generation by addressing these things head on. Rothbard also critiques, and this one I'll conclude with, classical liberals. And so his analysis on why did classical liberalism end up dying out, petering out, is that the classical liberals had lost a lot of their edge. They kind of lost sort of this exploiter versus the victim group dynamic. It's interesting, if you read like the Jacksonian movement that Patrick Newman talked about a little bit earlier, you get a lot of very radical language. Like you can kind of see why Marxism has some success a few decades later based off of how radical the rhetoric was, but it was great stuff. It was identifying the working class, are the ones being the victims of the financial speculators and, or benefit from free trade. There's a lot of really, really good liberal class analysis stuff in here. And it was losing it that Rothbard credits with kind of the weakening of the classical liberal political project. As you noted, in the 18th and first half of the 19th centuries, the classical liberals were not only a consistent intellectual movement, they were leaders of genuine mass movement. Indeed, they led the masses in their attack on the aristocratic monarchical old order. In the 17th century, at the beginning, they were the levelers. They were in America, they were the Sam Adams and the Henrys and the Paynes. In the 19th century, they were the James Mills, the radicals in America. They were the Jacksonians, all these great guys. They were not afraid of bringing the masses into social and political action because they realized that their interests of the masses were in opposition to their exploitation of the old oligarchic elite. But in the 19th century, the English classical liberals, for example, began to sit on the laurels of their partial triumphs and to begin concentrating, as Hayek points out, on niggling short-run details rather on their own broad worldview. This inner failure of classical liberalism is being replicated in today's heirs of English classical economics. The Chicago School, while Friedman and the Chicago School have had great influence over the profession of economics, they are unlikely to have much influence outside of that important but narrow sphere. For their emphasis, and Friedman and even more and his followers such as Becker, Poltzman, Alchin, and Tullock are focused not on general principles, let alone on moral principles, but on ad hoc empirical and mechanistic analysis of concrete issues and strictly on efficiency and cost-benefit grounds. Therefore, they've lost the plot. They've lost this sort of crusade. They've lost the beating of the hearts of man necessary to really fight for the ideas of liberty. And so I hope that, by having the experience you've had this week, which is unique, being around the people that you've met this week from all around the world, having the mentor relationship that hopefully you've been able to utilize talking to faculty members of various generations of the Austrian School, hopefully you will take these ideas and act upon them, that you will become evangelizing these very, very important aspects, key to the prospects of civilization. If we do that, we can destroy the Keynesian menace among us and have a better generation, a better future for all generations, including Generation Z. Thank you very much.
This is nice. The three of you, familiar faces. Awesome. Thanks. Oh yeah, you have, because you were at the, yes, that was the last time. I'm excited to hear what you think then. So, just one more minute here. But everything's silenced, including the computer. Got this on. Okay. Hi, everybody. Just about to start here. Okay. Well, my name's Daniela Bassi. I'm senior editor at the Mises Institute, and my talk is called "The Canadian Arctic Fur Trade: A Case Study of Freedom." So when we talk about anarcho-capitalism, total freedom and free markets, we're usually speaking in the abstract about how things might be. But today I have an example of people who actually lived and traded in something pretty close to total freedom from the state. It wasn't back in the Middle Ages, and it didn't involve any kind of voluntary subservience to a lord or some other private collectivity. It was in the first half of the 20th century in far northern Canada. I'm talking about the Arctic fox trade between the Canadian Inuit and white traders from Scotland, England, and various parts of Canada. If you've heard of Eskimos, you know the Inuit. They don't like this name because their Cree enemies to the south gave it to them as an insult. Eaters of raw flesh, people whose land was so barren, treeless, that they couldn't even cook their food. If you've ridden in a kayak or on a dog sled, you've used a traditional Inuit mode of transportation. The white fox trade was a period of Euro-Indian collaboration and peace. The traders bought white fox furs, which could actually be white, silver, or blue, to sell across Western Europe and North America. Back in the day, people loved their fur gloves, hats, and stoles, especially in the 1920s, which unsurprisingly was the peak of the trade. The traders also bought sealskins, which were valuable because they're waterproof, and polar bears and other white furs like Arctic hare. But foxes were pretty much the currency of the Arctic trade. You can tell from these photos of furs airing out. Inuit traded these furs for firearms, ammunition, metal tools, dry goods, and fun stuff like beads and tobacco and cool fabrics. As the trade matured, Inuit purchased a wider variety of goods. More fun stuff, like perfume and gramophones and silk underwear. But the less fun stuff quickly became the new essentials of the traditional lifestyle, which of course was semi-nomadic and dominated by hunting and gathering. You can see some of the things they bought in these pictures of the inside of igloos So what were the rules of the trade? They boiled down to mutual non-aggression and non-interference. The traders were also willing to accommodate Inuit in many ways. To be successful in the business, they learned the local Inuktitut dialect. They shared food with trappers and their families. They extended credit generously, and they interfered minimally with Inuit law. Let me elaborate a bit. Inuit outnumbered whites in the Arctic, and they still do. So no one expected them to speak English. But they also didn't like to use interpreters because they were concerned about privacy. Apparently, word about your finances and your personal life could spread pretty quickly, even at the ends of the earth. So Inuit preferred to communicate directly, and Inuktitut was the language of the trade. Most traders were at least proficient in the language, if not fluent. Like many other cultures, Inuit society values generosity with food. So to gain the people's goodwill, the traders also mimicked local food sharing practices, which I'll describe later. They fed everyone who came to the post for free. Some traders also allowed arrivals to feed their dogs from the post meat cache. In this time and place, the dogs just ate wild meat, raw meat, and they needed a lot of it because they weren't pets. They were working animals, and a family needed at least a few of these 100-pound dogs to move their stuff and get around. Otherwise, they'd be walking. The free food wasn't anything special by our standards. It was hot tea, some kind of hard biscuit or bread, maybe something sweet to put on it, and some tobacco. But it was significant to the natives, so much so that in deciding where to sell their furs, Inuit considered the quality of these gifts in addition to fur prices, subjective value at work. So competing traders could potentially convince Inuit to do business with them by offering better food gifts. And they did in fact try to one-up one another. For example, in 1920, Lansom and Hubbard Trading Company was feeding arrivals canned milk, sugar, cheese, and butter at its post in northern Quebec, where it was a new player. The incumbent Hudson's Bay Company trader was dismayed. He wrote, "I'm afraid we'll have to follow their lead, as the best means of holding an Eskimo is through his stomach." So, of course, the trading didn't start right after the free meal. Inuit took their sweet time to get down to business. It was the culture. At first, they rested up. Then they gossiped, who was sick, who was looking for a wife, what mishaps had transpired. Finally, when the talk circled around to hunting, the trader would take in the furs and lay out tokens on the counter to represent them, because Inuit didn't use fiat currency or count at the time. The trappers took their time picking stuff out, and they couldn't be rushed. Trading usually happened late at night, and it usually happened in an unheated storehouse, so you can imagine how patient the traders had to be. The trader would remove tokens from the table as the trapper chose items to show how much purchasing power the trapper still had left. When the transaction was finally finished, people left as soon as the weather permitted, although traders sometimes did complain that people lingered. A very important feature of the trade is that it operated on a very flexible credit system. Fur was the only thing Inuit could sell pretty much without limit to get the things they wanted. But without some sort of credit arrangement, they would have had to wait until they had furs to buy anything. Also, game and fur yields varied from year to year, as they still do. And when game was scarce, people would have to spend more time hunting and trapping. And when there were a few foxes, Inuit wouldn't really be able to buy much. So traders did also, even though traders did also accept meat, fish, fat, ivory, and other animal products. But without credit, Inuit would have borne all the risk of a poor harvest, and they might have decided that trapping wasn't really worthwhile. So traders who had a lot to gain shouldered much of the risk by outfitting trappers with ammo and dry goods on credit at the beginning of every season. Traders often provided free traps as well. They banked on Inuit having a good season and then selling their furs to them, which the trappers didn't necessarily have to do. Not surprisingly, the more successful and trustworthy the trapper, the more credit he had. But as I've said, the system was very flexible. So people who had outstanding balances from a poor season often received credit for the new season anyway, and traders carried the debt over for a few years. Unpaid debts were eventually wiped from the books, which is unique, and there wasn't any interest on this credit either. In general, Inuit paid their debts, even if it took them a while. They generally considered debt a serious obligation. Traders were also very understanding of the vicissitudes of animal stocks and of life on the land. Plus, they knew that without the necessary supplies, an indebted trapper would have a harder time paying off his debt to begin with. Perhaps for all these reasons, and maybe even some pity, private relief was also a feature of the trade. The Hudson's Bay Company, which was the biggest player for much of the trade, distributed dry goods and ammo during the toughest period when people were starving and came to the post empty-handed. And by starving, I mean that they had resorted to eating their dogs and their boots, which they did, when times were hard. Long before government welfare came to many parts of the Arctic, the HBC also helped widows, elders, maimed trappers, people who really had no way to make a living. The HBC traders also provided free, though rudimentary, medical aid. They pulled teeth. They helped with frostbite. They gave away medicines for colds and basic ailments. The HBC even kept reserves of walrus or whale meat for dog food, seal fat for human food, and seal or whale oil for heat, which you'd burn in a stone lamp or a different stove. Inuit could draw on these reserves when game was scarce. The HBC also bought caribou skins, which they essentially redistributed by selling them to Inuit in areas that were experiencing shortages. Without new caribou skin clothing, people would be very cold, very uncomfortable, because the clothing wore out every season, from moving around and wearing the same thing pretty much all year. Until summer, when you maybe changed into canvas parkas or something like that. Anyway, the most important thing, the traders refrained from interfering in Inuit communities or trying to change their customs. The traders mainly wanted Inuit to trap, and to encourage this, they focused simply on supporting the people and pursuing the traditional life on the land. Trading posts were opened near areas recommended by Inuit as being rich in game and fur, and the traders never stood in the way of the summer walrus hunt or the fall caribou hunt. These were the source of winter clothing, of meat reserves, and of dog food. The dogs ate a lot of whale and walrus meat, while people, bless you, mostly ate caribou, muskox, whale, and a variety of seals. The most interesting and telling form of non-intervention, though, and this might make some people uncomfortable, concerned executions of insane and dangerous people. In HBC post records and retrospective employee interviews, there are at least a few stories of Inuit who went mad. They threatened to kill their family or neighbors, and they were executed by their community in self-defense. The killings I read about happened in the 20s and 30s, and they're interesting because the traders were told what had happened, and they either didn't involve or minimally involved the police in the matter. In November 1924, for example, a trader recorded the following incident. Arrivals from Cape Smith report the people there in a very hard-up state. They also brought the news that David was running wild there sometime in July and was going to break into the storehouse and get cartridges to shoot off some of the people. He was going about in a funny way and prevented all the people from leaving their tents, fired a dart at a young boy, sharpening his knife very often and making threats, treating his wife and family very severely, and making other trouble amongst other men's wives. So they held fire and decided to put him out of the way. So his brother, Amamukiak, and another man shot him. This person was always giving us a certain amount of trouble and minding everybody's business more than his own. As you see, the trader wasn't very critical at all, and his comment about David's character may have been a way of vouching for the people's story. It doesn't seem that this killing was ever reported to the RCMP, which had arrived in the area 2 years before, and there's no evidence of an arrest or a trial. The trader had all the details to file a police report, but with peace and security restored to the community, it seems he chose to let the matter rest. Now, make no mistake, traders were latent agents of the state, just as most state subjects are. Willing or not, they tended to collaborate with the RCMP when they came around, and they did report at least some killings. HBC trading posts even stored fuel for fighter jets during World War II, but the traders didn't actively try to interfere in Inuit law. They often knew everyone involved in these incidents, so they tended to be understanding, even though these killings were crimes under Canadian law by default because they were vigilante justice. Remember, we're not allowed to take the law into our own hands. We all know that Euro-Indian contact often ended in bloodshed, but for the most part, Euro-Inuit relations in the Canadian Arctic were peaceful. The reason is that the state was pretty much absent from the Arctic, so let me tell you about that. In a time when many North American peoples were no longer sovereign, Canadian Inuit still ran their own lives because they were very isolated. They were stateless communities that essentially lived by an Inuit version of natural law. That's what I describe it as you may have gathered from the incident I just told you about. Each Inuit camp governed itself. There weren't any chiefs as in other native societies. People settled their own disputes, sometimes with the help of mediators, other times on their own. Respected individuals like great hunters and elders sometimes came together to decide how to deal with a major problem, such as a person who'd lost his mind. But this happened on a very provisional basis. No one had indisputable coercive power over anyone else, the way agents of a state have over its subjects. Each person could defend himself and his property against any aggressor, meaning that each person had full property rights in his person. The flip side of this, of course, was that if you killed someone, you had to watch your back. If you killed someone wrongly, that is. Inuit law was based on private property and restorative justice. The goal of restorative justice is to restore harmony rather than to punish, which is the focus of retributive justice systems like the one we live under. Inuit had communal property. This is just private property owned by a specific group instead of an individual. There were multiple Inuit groups, and each had its own territory. This map of Inuit dialects gives you a rough idea of how many groups there were. The ancestors of these groups earned their property rights by living on the land and taking their livelihood from it, just as other groups took possession of virgin land. Inuit land ownership in the era of traditional camp life, from at least 1550 to about 1950, didn't leave much of a mark on the landscape. There weren't any fences, igloos melted in the warmer months, obviously, and summer houses, like this one, could be dismantled and moved almost without leaving a trace. In much of the Inuit homeland, the frozen subsoil makes it impossible to grow food, except maybe on a small scale with a greenhouse. During the summer, there are some berries and plants that can be harvested, but for much of the year, there's very little wild plant food available. The need to migrate around the group's territory. Remember that Inuit weren't full nomads, they were semi-nomads, meant that there weren't really permanent structures. But there were a few lasting signs of occupation and possession. There were tent stones, depressions in the ground, and stone foundations that marked old camps. There were also old sod and stone houses, and cairns also dotted the landscape. And they weren't like the little hipster stone piles you see everywhere. They were large, like these. And that's because they were made by people who needed a landmark to find their way in a bare landscape. Finally, there were the tombs of the dead who weren't buried but were laid to rest on the hard ground and covered with stones. And I don't have a picture of one, sorry. Finally, proof to title of the land lay in people's knowledge of it. Neighboring groups knew each other and the limits of their lands. These boundaries were admittedly flexible, and people often did have fishing, hunting, and travel rights beyond their property. But strangers didn't know the land at all, so they couldn't begin to claim it. Within the group, land ownership was also communal, but that didn't mean anyone could set up shop wherever. Because Inuit communities spent most of the year split up into small winter camps, 2 or 3 families only, each subgroup lived, hunted, and trapped in a specific area and came to be associated with it. These family plots of sorts could include sections of sea ice in addition to land, and according to geographer Peter Usher, individuals were also recognized as having preeminent rights to a trap line or a fishing spot. People always had to ask permission to use land that wasn't theirs. Private property, of course, included movable goods like clothes, tools, and food. There were special rules around food, which was probably the most valuable form of property, depending on the situation. Inuit are known for their traditional food sharing practices, which I mentioned earlier. And even today, they have community freezers in their villages. But there were clear limits to this generosity back in the day, and that's probably still the case today. This is how it worked. There was a tacit obligation to share food with your group if you had any to spare during periods of starvation. This was a kind of insurance policy. The idea was that if you shared what you had, the community would help you when you were starving, which was not an uncommon situation. This was a land with very low carrying capacity. Sharing with anyone who came under the horizon was a recipe for famine. So if strangers came begging, you played dumb. Food sharing didn't mean that there weren't individual property rights in food, though. Meat was stored by specific people and households, and only members of their specific group could take from those caches, but even they had to ask permission Taking someone's cached meat was probably one of the most serious thefts because it put victims at risk of starving. So natural law based on private property kept peace in Inuit communities. But although Inuit, as we have seen, already owned many parts of the Arctic, though not every square inch of it, as activist scholars would have you believe, the Canadian government had claimed their homeland as its property since roughly the last quarter of the 19th century, when the British government transferred it and a bunch of other lands to Canada. These maps give you a rough idea of how the country's internal boundaries changed over time, down to the present day. See? And that's pretty much how it is today. Nunavut was added in 1999. Nevertheless, the Canadian government had very few footholds in the Arctic at the dawn of the 20th century. By 1915, the whaling industry was in decline, but that was after more than a century of pretty much unimpeded foreign whaling in Canadian waters. Foreign explorers, prospectors, and anthropologists crisscrossed the region. Some even planted flags for other states. Otto Sverdrup claimed the Sverdrup Islands and parts of Ellesmere. Who's that? Is that me? Anyway, sorry. Anyway, Otto Sverdrup claimed the Sverdrup Islands and parts of Ellesmere Island for Norway. And Robert E. Peary claimed the entire region for the US. Those claims didn't pan out, by the way. And of course, Inuit went on sealing, whaling, trading, and migrating, sometimes across international borders into Greenland and Alaska. And there were some clashes between the Danish and Canadian government over the Greenland hunting trips. Anyway, because the Arctic wasn't obviously any good for farm settlement, the Canadian government wasn't very interested in it. See, they didn't know about the oil and the uranium yet, so they didn't want to do much up there. They were okay with having the region function basically like a massive fur preserve. Nevertheless, all the foreign traffic kind of started to freak them out a bit. So they started sending Mounties north. In the Western Arctic, where there was still a lot of whaling going on, the first police detachments were established in 1903 at Herschel Island, Fort McPherson, and Fullerton Harbor. By 1919, there were 25 detachments and over 70 men in the Arctic, according to the RCMP. But in the Eastern Arctic, which was more isolated, there was no police presence until 1922, when the first RCMP detachments were established at Craig Harbor and Pond Inlet. The police were tasked with telling people that they were on Canadian soil, informing them of Canadian laws, extorting customs duties from whaling ships, and supposedly keeping order. Though they investigated crimes, the police were lenient toward Inuit at first because they considered them primitive people who had to be introduced gradually to so-called civilization. But even if that hadn't been the policy, the reality wouldn't have changed much. Many crimes simply weren't investigated, and this was because of the logistics involved. The police posts were ultimately few and widely scattered. It was almost impossible to cover the distances necessary to investigate every crime. Remember, this was a place with no roads, with extreme weather, pretty hard to get around. People could easily avoid the police if they wanted to. Many whalers avoided fees by operating just out of reach, and Inuit accused of crimes could stay out of sight too. It's also worth mentioning that in their day-to-day, the police directly relied on Inuit, who acted as guides, translators, provisioners of meat, and housekeepers. It's a little easier to enforce the law when the government pays you with money stolen from an anonymous taxpayer. And though this was true of the Mounties, the frontier conditions of the Arctic complicated things. When offenders were pursued, it took years to catch up to them, especially before the wireless radio, which only appeared in the late 1920s. Even when the Mounties did catch up to them, the charges were usually dropped due to lack of evidence and the difficulty of initiating legal proceedings. Judges had to travel north for trials, so a few years could go by before a case went to court. The first two Inuit to be tried under Canadian law were tried in 1917, 4 years after they killed two Oblate missionaries. And in case you're wondering, the men were guiding the missionaries, and things went south when one of the priests threatened and hit one of the guides. And don't forget that there weren't any courthouses or jails. Let's see, they're having court outside. When people were held by the RCMP, they ended up helping out with chores and were even allowed to go hunting. This was the experience of the men in the last photo. They spent years just hanging out, basically. The enforcement infrastructure just wasn't there. All this is to say that Canadian state authority in the Arctic was more symbolic than real at this time. More than anything, the police were supposed to represent Canadian authority, and they mostly did this by planting flags and going on long patrols a few times a year, which they continued to do as late as 1969. Great use of taxpayer dollars. Though the Canadian government's presence and interference in the Arctic grew by the decade, it remained very weak until the World War II era, which brought a heavy military presence to the Arctic and more attention from Ottawa. In the absence of the state, Inuit and whites met on the relatively level step of Inuit natural law. When disputes arose between them, Inuit applied the rules that kept order in their camps. And although the traders were all state subjects, they had more leeway than ordinary citizens to defend their lives and property because they were pretty much on their own. No ambulances, no animal control, and more than likely no police. Because traders couldn't defer to the state in an emergency, they were also living under natural law and practice, though they would of course have to answer to the authorities when the annual ship arrived. The statelessness of Inuit societies and the limited power of the Canadian state in the Arctic meant that there was essentially no monopoly of justice. The circumstances, I apologize. Anyway, the circumstance created an environment of accountability and mutual respect for others as persons and property, because under natural law, aggression has powerful and definite repercussions. In the Arctic, the government couldn't shield anyone from the consequences of his actions, so no one could kill or steal with the short-term impunity that is possible when one entity administers all judgments and punishments. Acts of aggression could and did culminate in execution by the Inuit community. The case being decided in this picture is an example of that. But when everyone is fully liable for his actions, peaceful collaboration is often the best option, though that doesn't mean that there aren't criminals and other deviants who cause trouble. The trade itself also encouraged people to keep the peace. The traders weren't in the region to plunder, to pillage, to colonize, to convert. They were there to do business with the locals, so it didn't make sense to violate their property rights and piss them off. Likewise, Inuit saw the traders as a source of valued goods. They weren't oppressors, they weren't a burden. So they didn't try to expel or kill them, which they had done with some of the earliest visitors to their homeland. Each group could continue to live by their norms and come together for trade, and they could avoid conflict through mutual respect and mindfulness. In general, the My House, My Rules policy that reigned in the Canadian Arctic from roughly 1900 to 1945, though trade continued thereafter for some time, resulted in a higher standard of living for Inuit. They were able to continue their traditional life for a long time while adopting new goods and practices as they saw fit. It resulted in more wealth for traders and their companies who could enjoy a better lifestyle when they returned home to what they affectionately referred to as civilization. Call me crazy, but I'd say that the Canadian government ruined a good thing. And if you want to learn more about how that happened, you can check out my book on the fur trade, which will be out this fall. Thanks. Put this to sleep. Could you repeat that? I'm sorry.
All right, thank you welcome to the last talk of the afternoon. And then Salerno will come on after me to wrap things up, and then there's a cookout and other festivities after that. But first, you must endure this talk about Ralph Raico's book on the struggle for liberty, a libertarian history of political thought. And so the name of this talk on the schedule is 5 Lessons from Raico's History of Political Thought, but I'm unilaterally renaming it to 5 Myths about the History of Political Thought, myths that Raico dispenses with. So let's talk a little bit about him and the book. So in 2004, the late historian Ralph Raico, a longtime senior fellow at the Mises Institute, presented a 10-hour lecture series here on the history of political thought. He called it History, the Struggle for Liberty, and attempted in a short period of time, 10 hours, to present his students with a concise summary of more than 400 years of political thought that underlies the political ideology of laissez-faire. So this lecture series is now available in book form. It looks like this. We have copies in the bookstore. It's extensively annotated, providing bibliographical notes and some additional commentary on Raico's sources and work. So I wanted to take that lecture series. So I took that lecture series and I edited it into a book and added all the sources and everything so you can look into in more detail for the details on this history of political thought. So it's an introductory work for the most part. It's meant to be read somewhat as a companion piece with Murray Rothbard's History of Economic Thought. And I think between these 2 books, you can come away getting a pretty good idea of the larger context of thinking and historical events around the ideology of laissez-faire. So should you read Raico's book, you'll find several recurring themes that come through in his narrative. And I'd like to talk about 5 of these for you today. Now, he talks specifically 5 common myths about this history of intellectual thought, specifically as it touches on the idea of laissez-faire, freedom, and free markets. And this is especially important, I think, coming from Raico himself, who was a working historian, had special knowledge in the field of intellectual history, and I think he's uniquely qualified to comment on a lot of these matters. So what are these 5 myths? The first is the idea that the ideology of laissez-faire, which we now call libertarianism, is separate from the movement that we have historically called liberalism or classical liberalism. Some people contend that these are 2 separate traditions. Raico shows that this is not the case. The second myth is the idea that Jean-Jacques Rousseau, in the context of the so-called Enlightenment, made important contributions to liberalism. Raico shows that the Enlightenment, by which is generally meant the French Enlightenment, and especially Rousseau, is not at all central to the development of liberalism or laissez-faire. If anything, it's very bad in terms of the damage done to that topic. The third myth is that we should look at John Stuart Mill as an essential or indispensable theorist of 19th century liberalism. In fact, Mill was, to use Raico's term, a disaster for liberalism. The fourth myth is that liberalism frowns upon the idea of class conflict and class exploitation. We're often told today that this idea is from the Marxists and everybody gets along in liberal ideas. Not so, Raico shows. And finally, the last myth is that constitutionalism will save us. For Raico, he thinks it's clear that the constitutionalist idea, which was a subfield really of liberalism, has clearly failed, and that we need to look to other solutions for protecting freedom and fighting state power. So let's look into these in some more detail. The first myth is that Raico addresses is the contention that libertarianism remains outside the historical liberal tradition. This idea is employed today by supporters of the status quo and regime apologists who they tend to posit so-called classical liberalism as eminently moderate and reasonable, while libertarianism is radical and a new invention that people from the 19th century would not have recognized. For example, if you see the phrase classical liberal in a bio of some political commentator, it's fairly safe bet that that person is using the phrase to communicate how moderate and reasonable he is. I mean, sure, he might want like slightly lower taxes or maybe more gay marriage or something like that, but he's certainly not a radical. And but Raico shows that radicalism is actually at the very center of the historical movement that we now call liberalism or classical liberalism, and this idea that it's pretty much just what conservatives like today is completely not the historical reality. Now, historically, its roots go back quite far, and this is one of the nice benefits of the book, is that he goes deep into the past, into late antiquity even, to really show what the true historical roots are of the idea of freedom. And in this, he draws heavily upon Lord Acton, who also did a lot of similar work on that. Raico goes back to the levelers, really, to get kind of the first true political cohesive movement of libertarians. Now, they were one of the levelers, spelled with two L's, by the way, levelers with two L's. It'll come up as wrong in your spell check, but that's the way it's spelled. And they were one of the more notable radical groups. They were agitators of the English Civil War period. They heartily opposed, they were on the fringe. They opposed mercantilist monopolies. They were very much against any limits on freedom of speech. They wanted decentralization of arms. That is, they wanted private ownership of guns. They wanted local militias instead of military power controlled from the center. In fact, a lot of their ideas come down to the United States from the 17th century into the late 18th century, and a lot of their ideas show up later in the Bill of Rights. Now, some conservatives have claimed that the levelers were some sort of quasi-socialist group. They often try and compare them to the Duggars, who were much more truly a socialist group from that time period. But they weren't like that at all. They were a bourgeois, liberal group that would have been quite recognizable in the 19th century as a fairly radical, liberal group. Rothbard describes the levelers, for example, as the world's first self-consciously libertarian mass movement, unquote. Raico also points out that John Locke was influenced by the levelers' libertarian sensibilities, and Rothbard had pointed out that Locke himself and his patron, the Earl of Shaftesbury, were working out a, quote, neo-leveler synthesis, unquote. So Locke's radicalism is also underplayed by a lot of modern observers. Raico points out that Locke was actually very much dissatisfied with the Glorious Revolution of 1688, which Locke felt was far too tame and limited, would have liked to see much more movement in the direction of what we would see today as radical liberalism. And of course, Locke was very influential on Jefferson and on many of the American revolutionaries. Now, Raico doesn't have a whole lot to say about the Americans. His specialization is largely in European thinking and the West overall. But he does note, of course, that the Americans were secessionist radicals. They weren't like some sort of moderate group of people that Russell Kirk would get along with very well. They were far, far too radical for that, especially in their secessionism and in their devotion to natural law as essentially exempting them from civil law in many, many cases. And there was this radical strain of liberalism, Raico notes, that dominated in the very early United States, but has now been ignored by those who support the conservative authoritarian counter-revolution of the 1787 Constitution, people like Hamilton, Adams, and other centralizing Federalists who wanted to do away with the more radical 1770s style revolutionary schemes of the liberals from that period. Overall, there's plenty of radicalism to go around in the liberal movement into the 19th and 20th centuries as well. For example, we can point out all sorts of radicals from both England and France in that period. I mean, it's clearly a radical liberal like Richard Cobden would be considered intolerable by most modern, quote-unquote, free market conservatives. Cobden led a group that was vehemently free trade, that was vehemently anti-imperial, that was anti-war. The liberals of his time period wanted to abolish the standing army. You had similar movements in France as well, with Charles Dunoyer, Frederick Bastiat wanting to get rid of the French army and replace it with privately owned arms and local militias. Herbert Spencer, of course, could be considered a anarchist at various times of his career. And of course, there was Gustave de Molinari, who wanted to privatize military institutions and essentially privatize all state services. And he also pushed for widespread secession and radical decentralization overall. Raico provides a lot of analysis and really shows how those thinkers influenced liberalism down into the late 19th and early 20th century, including within the United States. But of course, their influence now is today downplayed and ignored by a lot of modern day theorists who wish to really rewrite the history of liberalism. Now, also what you'll encounter when you're looking at this history of liberalism is this idea that people fixate on a lot of little philosophical strains, and they'll blame liberalism for all sorts of philosophical faults that really have very little to do with the actual liberal project in practice. And for example, Raico opposed this, by the way. He didn't want to complicate the matter of what was liberalism overall. So he says, now it is sometimes maintained that underlying liberalism is a particular philosophical system, in the sense of a particular metaphysics and epistemology. There are simply too many divergent and conflicting philosophical traditions within the history of liberalism for this idea to be convincing. He just says simply, the working definition of liberalism that I will adopt is this. It is the ideology that holds that civil society, understood as the sum of the social order minus the state, by and large runs itself within the bounds of a principle of private property. This is liberalism as I will be discussing it here, unquote. Really at the core of this was opposition to state power. It wasn't some particular ideological or philosophical idea about metaphysics, especially in the way that it played out in the actual political sphere. The way it became applied in real life had very little to do with some of the philosophical arguments going on among people who might have called themselves liberals in many cases. Now, this concise definition of liberalism by Raico takes us to the next topic. It is the myth that liberalism's foundations are found somewhere within the French Enlightenment or even with Jean-Jacques Rousseau. Now, if you've been through an undergraduate class in the history of political thought, you've possibly encountered the idea that Rousseau was some sort of proto-liberal. You might even hear this about, say, Thomas Hobbes, which is also an equally terrible idea. It may be that later theorists get confused by the fact that Rousseau wrote a book about the social contract, thinking this had something to do with with liberal constitutionalism. In any case, some theorists try to make Rousseau out to be a contributor to the liberal tradition. To say the least, Raico did not agree with this assessment. Indeed, it might be said that Raico loathed Rousseau, even said that we shouldn't, the ad hominem fallacy is something to be avoided, but in some cases, like in Rousseau's case, maybe we just need to discuss what a despicable, horrible person he was. So that gives you a sense of Raico's opinion of Rousseau. By the way, he included Woodrow Wilson in the list of people who are so horrible you should discuss their personal life. Raico goes on to describe Rousseau as one of the most destructive political theorists in history, partly because of his terrible ideas, but also partly because he was so influential. Rousseau was perhaps the single most influential theorist in the minds of the worst French radicals of the Revolution. Robespierre, for example, was a devoted disciple of Rousseau. It should not surprise us then that Rousseau was a great enemy of private property and a de facto supporter of the unlimited state. Raico puts it this way, quote, like Locke, Rousseau had posited an original social contract, but where the English philosopher had attempted to employ this notion as a foundation for civil rights, in Rousseau's conception, the contract involved the total surrender by the individual of his life, liberty, and possessions into the hands of the community, unquote. This community was governed by the so-called general will, which was essentially the democratic mass that would control everything. Rousseau seemed to naively believe that the general will could somehow be neutrally imposed on the population. This very idea is obviously absurd, but Rousseau had a rather unsophisticated understanding of the fact that the policies of a state must ultimately be carried out by a class of bureaucrats and technocrats acting as state agents. In practice, this unsurprisingly took the form of various French revolutionary dictatorships. One problem with Rousseau, according to Raico, is that Rousseau rejected the idea of natural law and thus respected no natural limitations on state power. Raico notes that Rousseau subscribed to a theory that society could be built and remade at will in accordance to the dreams and theories of a great lawgiver. Raico writes, quote, "This is the puerile theory, the idea that a super genius somehow created a society, that Rousseau and other writers of the French Enlightenment had as to how society comes into existence. Society is instituted by some great lawgiver. Moses instituted the Hebrews, Solon instituted the Greeks, Lycurgus instituted the Spartan people, and so on." And we see here, of course, the seed of central planning and totalitarian dictatorships. Yet bizarrely, we often encounter claims that Rousseau was somehow part of the liberal project. Among these are F.A. Hayek, of all people. Raico notes that Hayek liked to denigrate the continental and French liberal tradition, but in doing so, he would include non-liberals in his lists of alleged continental liberals as a way to show how bad the non-British liberals were. So Raico says, there's a kind of funny game that Hayek plays, because in the British tradition, he lists not only David Hume, Smith, and Burke, but also Alexis de Tocqueville and Benjamin Constant, who were not exactly British subjects. And among the French, he mentions the physiocrats, the encyclopedists, Jean-Jacques Rousseau and Henri de Saint-Simon. It's a peculiar thing, it seems to me, if you're talking about the liberal tradition, to bring in the French encyclopedists. Some people do consider them to be liberals, but Denis Diderot and Baron de Holbach and so on were hardly liberal, in my view. This is Raico talking. And then he says, certainly not Rousseau. So there's no doubt in his mind that Rousseau had nothing to do with the liberals. Unquote. Raico more than once expresses doubt that the Enlightenment had much to contribute to the liberal project at all, and the connection is indeed tenuous. For more on this, we could look to Raico's book called The Place of Religion in the Liberal Philosophy of Constant, Tocqueville, and Lord Acton. That's also downstairs in the bookstore. Raico approvingly quotes Lord Acton, who says, all these factions of opinion in pre-revolutionary France, that is among the French Enlightenment thinkers, were called liberal. Montesquieu because he was an intelligent Tory, Voltaire because he attacked the clergy, Turgot as a reformer, Rousseau as a Democrat, Diderot as a free thinker. The one thing in common to them all is the disregard for liberty. So today, a lot of these men are listed as liberals or proto-liberals, people central to the tradition, and neither Raico nor Acton are convinced by that at all. We can see other ways that Raico has aversions to Enlightenment schools of thought. One of Raico's favorite thinkers is Benjamin Constant. He notes that it was unfortunate that Constant had come of age under the tutelage of many French Enlightenment thinkers and then had to spend much of his, quote, intellectual career struggling to free himself from this mental framework, unquote. Being influenced by the French Enlightenment was a type of handicap if you wanted to actually think clearly. And also, just one aspect of it too was that so much of French Enlightenment thinking was essentially empty, in that it was just cynical and just regarded everything as not sacred, everything as being worthy of being torn down. What mattered most was to be thought to be clever in this social milieu of the time. And Raico says, Constant regarded this as disastrous to the moral life of France. So everything was just kind of a joke for the Enlightenment thinkers, and that really just did not contribute much to the liberal project as well. Now, so speaking of degraded moral life, this brings us to our next topic, which is the unfortunate influence of John Stuart Mill. Specifically, the third myth we will address here is this. John Stuart Mill was the quintessential 19th century liberal, central to liberalism as viewed in Europe and America. But this is not true. Many other theorists were far more important at the time in terms of real applied liberalism in the real world. But Mill's thought actually represents a distraction and a diversion from what has always been the most important aspects of the liberal program. Raico puts it this way. John Stuart Mill played a crucial role in the transition from the older liberalism, the laissez-faire liberalism, to the new liberalism. That is the modern left-wing ideology that some people now call liberalism, which is a type of democratic socialism. And Ralph notes that you've probably encountered this in your own schooling. He says, "It is to my mind a disservice when a typical college course that deals with the history of political thought does this. As an example of 18th century liberalism, they'll maybe have Adam Smith. As an example of 19th century liberalism, they'll have John Stuart Mill. To my mind, he occupies a vastly inflated position in the conception of liberalism entertained by English-speaking people." Raico regarded the French liberals as far better thinkers and really even more important in terms of their influence, and we can see that partly in Jefferson, but also even some American thinkers later on in the 19th century. He blames somewhat Anglocentrism for that and the fact that Americans can't read any languages other than English, so they think that John Stuart Mill must be super important because he wrote in English. Now, Raico describes Mill's contribution to liberalism as disastrous. Specifically, Mill was bad when it counted the most. He was bad on trade. He says, quote, "The principle of individual liberty is not involved in the doctrine of free trade." And he wasn't even using this in international trade. In his context, free trade meant simply commerce in general, trading with your fellow countrymen, trading across national lines. Mill thought that trade and commerce somehow had nothing to do with liberalism and freedom. He then also was bad on foreign policy. He favored foreign interventionism. And in many ways that modern leftists do today, or just modern interventionists do today, where, well, if it's for a humanitarian cause or it's for spreading civilization and so on, the British Army can go and get involved in foreign wars. So he was bad on both peace and freedom, which most other liberals were quite good on during this time period, both in England and in France. So Mill was running contrary to that, to all of those strains of thought. Now, what contribution Mill did make, which was particularly problematic, was that Mill had this idea, he drastically redefined freedom to include freedom from private pressures and private discrimination. Raico writes, "Liberty, it seems, according to Mill, is a condition that is threatened not only by physical aggression on the part of the state or other institutions or individuals. Rather, society often poses even worse dangers to individual freedom. That is society, the non-state part of the polity. For example, Mill believes society threatens liberty with, quote, the tyranny of the prevailing opinion and feeling and the tendency to, quote, impose by other ways than civil penalties society's own ideas and practices as rules of conduct on those who dissent from them." So Mill had this idea that if you don't approve of other people's way of living, you're somehow coercing them. You're somehow forcing them to live in a certain way. And we can see how very modern that is and why people on the left would like to point you to Mill as the quintessential liberal because he fits very well with modern ideas here. But what gets lost in all that shuffle is the idea that state coercion is the true source of the problem, as a typical liberal would have thought in that time period. Now, as Raico points out, Mill was no fan of Christian morals and he especially hated Catholicism. And he attempted to make liberalism into an ideology that would reinforce Mill's personal animosities. Mill had what Raico calls lifestyle problems. That is, he was running around with a married woman, and this apparently took a toll on Mill personally. And so it seemed to really impel him to invent a whole political philosophy that criticized people who didn't approve of Mill's lifestyle. And so Raico says, when an individual has lifestyle problems, that's up to the individual, and it's a private matter. That's fine. However, when these problems fuel and provide the basic impetus behind one's political philosophy, then it becomes a problem. And so this obsession with getting other people to approve of him and this idea that his own weird version of sexual morality should therefore inform everybody in society, and everyone should get behind him on this. He came up with his own sort of puritanical reverse morality, which condemned anyone who chose to subscribe to his own view of culture, and which he condemned then as enemies of freedom. But this meant that Mill was, quote, in the words of Maurice Cowling, one of the most censorious of 19th century moralists. Mill constantly passed judgment on the habits, attitudes, preferences, and moral standards of great numbers of people of whom he knew nothing. So let us now return to better liberals who did more to draw out attention to the actual evils of the state. And this brings us to the fourth myth. That is that the idea of class warfare was invented by Marxists. Now, you'll occasionally encounter this. I noticed that James Lindsay has some sort of obsession with this lately in social media, this idea that we don't subscribe to the idea that any group of people is exploiting any other group of people, and if you subscribe to that, you're some sort of socialist. Completely untrue. Raico has extensive work showing that liberal exploitation theory was actually stolen by the Marxists and turned into their own theory. And you can see this across many liberals, both in Europe and in the United States. Perhaps one of the most observant of this was Pareto, who, as economists, you're probably familiar with Pareto optimality and stuff, but Pareto is actually a very radical political theorist as well, and has some excellent analysis on elite theory and the ruling class and all of that. And he just notes in a variety of ways that, look, in society, there are those who rule and those who are ruled. There are those who exploit and those who get exploited. And that this is a term that he uses to describe this as spoliation, spoliazione in Italian. And it's used in many cases by Pareto. It's used also by Frederick Bastiat. It's used in the French original of The Law, where he uses the phrase la spoliation légale, translated as legal plunder by many English language translators, but you can see he's using the spoliation term there. The idea is that the ruling class is engaging in this spoliation, that is this plundering of the people who actually pay for everything. And the Italian liberals especially were constantly excoriated the Italian state for essentially being a band of thieves and robbers that were constantly exploiting the regular people. And the great British radical liberal John Bright had similar views, and he also applied this very frequently and heavily to the idea of war. This was something that the liberals of the time period were very cognizant of, was that war provided the best excuse and the most convenient excuse for members of the ruling class to exploit the people who paid all the bills. And Bright certainly pointed this out, and he used the phrase the tax-eating classes versus the tax-paying classes. And you were either in one or the other, at least in a net sense, right? You might pay taxes, you might also receive some state benefits, but someone is net paying taxes and someone is net receiving taxes. And these are two different groups naturally at odds with each other, and this is exploitation that is going on. And it was the liberals that were very cognizant of it. Also, by the way, the liberals were not fooled by the idea of just because you called yourself a private organization, this did not necessarily make you part of the productive class. Especially in wartime, they recognized that private organizations were enriched very much by state action in terms of weapons manufacturing, in terms of a variety of regulations and laws that were passed, protectionism, all of that was used to help one class of people exploit another class of people. And of course, in America too, we have excellent thinkers along those lines. We had the great Northern Jacksonian William Leggett that Raico talks about and clearly likes. Leggett created the idea, the phrase of the separation of bank and state. And Leggett was a great enemy of the central bank and central banking. Also, William Graham Sumner, a great American libertarian, who also invented the words plutocrat and plutocracy. This was not to criticize wealthy people in general, but to criticize those wealthy people who used their political influence to enrich themselves at the cost of other people. So they were sophisticated in their thinking, and that it wasn't simply public versus private. You had to dig deeper into that to understand, okay, who's actually doing the exploitation, and these ostensible labels mean very, very little. The liberals were not fooled by this idea of the common good, that we all pay into something and we all benefit together. No, there are simply those who rule and those who are ruled. Now, lest you think that really the Marxists didn't notice all that, Raico goes out of his way to point out a couple of passages. He notes that the Communist Manifesto, published in 1848, begins this way.
The history of all hitherto existing society is a history of class struggles, freeman and slave, patrician and plebeian, lord and serf, yield master and journeyman. In a word, oppressor and oppressed stood in constant opposition to one another, unquote. That's how the Communist Manifesto begins. Raico notes that about 10 years earlier, a radical French liberal who was a protege of Jean-Baptiste Say named Adolphe Blanqui had written an intellectual history, and he talked about, and this is how he writes it in his book, in all the revolutions there have always been but two parties opposing each other, that of the people who wish to live by their own labor and that of those who would live by the labor of others. Patricians and plebeians, slaves and freemen, Guelphs and Ghibellines, red roses and white roses, etc., etc. For Raico, it was pretty obvious that Marx had just stolen this idea from Blanqui and the liberals in general. And now this brings us to the final myth. And this is the idea that we can somehow be saved by written constitutions and that there are legal solutions to our current problem. Raico is in many ways a pessimist on a lot of this. He felt that significant changes were going to have to be made to how liberals thought about things and what solutions were really out there. And he did not believe that there were legal solutions to the current problems that were really facing those who wanted to have some sort of a free society. Now, we recognize that the idea of constitutionalism is attached to liberalism. It's not core to the idea of liberalism, but it was a tactic that was generally endorsed by many liberals. Kind of the idea of voting also, right? Like widespread suffrage was also endorsed by a lot of liberals, but none of that was core to the idea of liberalism, which was the idea of limiting the state and maximizing freedom from state coercion, specifically. So Raico says, look, the constitutionalist idea, it was nice, but the problem was that the liberals supported this idea of tearing down all these intermediary institutions, of building up a unified, unitary state, and then thinking that constitutions could then be used to limit state power. That a mistake had been made when they did away with all of the old institutions, the church power, the guilds, the intermediary corporations, that had been a hassle, that had limited freedoms in many ways, but had also been a complicating factor for the state. That had all been wiped away by the liberals, and in place, the liberals put these written constitutions. But it turns out those didn't act nearly as well in terms of limiting state power. So Raico concluded, well, the mistake has been made. All we've got now are these written constitutions, and lo and behold, who determines what's legal under these institutions? It's the state itself. And this, of course, is common in the United States as well, right? We have this written constitution, but it's the federal government that determines what powers the federal government may exercise. There's really no way out of that, he notes. So long as the ideology of the ruling class determines that whatever the state can do, whatever the state needs to do, the state is never going to let you leave. The state is never going to voluntarily threaten its own power in any significant way. Sure, they might let you win some little battles here and there, but they're never going to endorse anything that truly takes down state power. So, in the end, Raico sees the only way out of this as deconstructing the state and of embracing secession in a widespread way. And of course, secession is extra legal in terms of how it's actually exercised. In almost every case, the state is going to determine that secession, while it might be acceptable theoretically in many countries, they're going to fight it tooth and nail. And if the state has anything to say about it, they are going to determine that it is in fact not legal and that you have no recourse. This way, you're going to have to win some sort of battle. Now, Raico hopes it's peaceful, but you're going to have to be able in some way to change the ideology or the political realities within your country to get the people to embrace the deconstruction of that state. The liberal project made an error by constructing strong states and then putting in place these constitutions that Raico thinks failed. The answer is in deconstruction of the state. There cannot be any way forward that assumes states continue in their current form and continues to exercise power in the way that they are. So those liberals and conservatives who still cling to the idea that everything will be all right so long as we just respect the Constitution, so long as we respect those in power, that the right decisions will be made in some sort of conscientious way by people or those who are in power. Raico comes down very much more so on the side of a Pareto, or even maybe a Machiavelli, who sees that really the political game is the exercise of naked coercive power, and they don't care who gets crushed in the process. And so there's little hope to be had in what is the state-endorsed legal process, and we simply cannot rely on that to save freedom going forward into the future. So I recommend looking more into this book. We have copies down in the bookstore. Obviously, I'm just providing a very short summary here, and there's much more that you can explore. So thank you very much. Enjoy the rest of the conference.
Okay.
This is my favorite part of Mises U, so I'm going to get comfortable. I can't work the button. Okay, so, first of all, to get to the serious matters here, I'd like to thank all donors who made this week possible. I mean, it's really an act of generosity that goes a long way in many people's lives. So I really do thank them. And thank you for providing your feedback on the student survey, all of you. Your comments are appreciated. And the winner of the student survey raffle is Asher Bokestein. Lou Rockwell silver coin. Cherish it. Okay, let me announce this year's fellows in residence. Please stand as your name is called, but hold your applause until the end. Okay. This year's fellows in residence are David Brady, Jr. from Florida Southern College, sponsored by Jerry Dowell. Jared Friesen from the University of Angers, sponsored by Mr. and Mrs. Walter Woodle. Manuel Garcia Gojan. Are there any more names in there? Manuel or? Okay. From George Mason University, sponsored by Jerry Dowell. Sergio Lopez from George Mason University, sponsored by Jerry Dowell. Jason Priddle from Florida State University, sponsored by Mr. and Mrs. Walter Woodle. Ben Sievers from West Virginia University, sponsored by Mr. and Mrs. Walter Woodle. Ryan Turnipseed from Oklahoma State University, sponsored by the Dean and Cam Williams Foundation. Stanislav Vatovitz from Nikolaus Copernicus University, sponsored by Jerry Dowell. And Jonathan Yen from Montana State University, sponsored by Dean and Cam Williams Foundation. This summer's intern is Landon Terrell from Oklahoma State University. Please give them a round of applause. The 2025 Gary G. Schlarbaum Prize, awarded to a young scholar who was here as a fellow and as a Mises U student a few years ago. It's for excellence in research and teaching, goes to Christopher Mooston Hansen. Okay, the Mündliche Prüfung, which we just completed, is an optional exam for, and it was named by Guido Hulsmann. Okay, is an optional exam for students who would like to have their knowledge tested at the end of the conference. Thank you to Doug French and Ken Garthshina for sponsoring this competition. Preliminary written testing takes place on Thursday to determine who is qualified to take the final exam, which occurred today. 67 students took the preliminary exam. 21 of those scored 19 or more correct answers out of 25 questions to qualify for the oral examinations today by a very mean faculty jury. 11 students passed the oral exam and 5 passed with honors. Certificates for passing the oral exam are at the registration table, okay, so you can pick them up. People who passed are Brandon Quezada Amor, David Cardaranella, Scott Cross, Jared Friesen, Teomin Gocek, Manuel Garcia Gojan, Hugo Holgren, Tin Ka, Ludovico Lumachisi, Bray Sadler, and Jonathan Yen. Passed with honors are Gabriel Franca de Almeida, Cruz Marquise, Adam Morris, Kyle Sadloka, and Ryan Turnipseed. Please give them a round of applause. And now for the prize winners, top 3 finishers in this competition. Please come up as I call your name. In third place, winning the Kenneth Garshina Prize of $750 is Gabriel Franca de Almeida. Got it? Okay. Good job. Second place, also receiving the Kenneth Garshina Prize of $1,500, is Ryan Turnipseed from Oklahoma State University. There was no first prize awarded this year. No. First prize, the Douglas E. French Prize of $2,500, goes to Adam Maurice from the University of St. Thomas. Congratulations. And that was all that was standing between you and the food. So we are done. And congratulations to all of you for being here. We're very happy to have had you. Should all prize winners stay? All the 3 prize winners please come up for stage pictures?